Up. Hey, we're live. We're live. Welcome back, you guys. How you guys doing? We got Tanner Adams today, business owner, entrepreneur. Tanner, what up? How's it going?
Pretty good, Jeremy. Thanks for having me on.
Yeah, 100%. What's going on? What'd you do this weekend, man?
This weekend went fishing, with the kids and the wife. So what about you? What'd you end up to?
My mom was actually visiting. I went to we took her out to go eat. Went to the Canelo fight. Well, we didn't go to the
Ooh,
fight, but we watched
okay.
it. It
Yeah.
was okay. I think I like UFC a little better. You?
Yep. Yeah, man. I don't know if you see, I got my UFC belt right over here.
Oh,
Over
that's
my.
right. Who's your guy? Who do you like in UFC?
Mm, you know, I got a lot of them, man. I really like Oliveira right now.
Okay, you like Oliver?
Um, I was a Connor dude for a while, but really any of them. John Jones, the heavyweights, middleweights. I mean, UFC's my shit, so I love it.
Okay. I actually went to school with Gaethje, Justin Gaethje. I wrestled
Ooh,
him, played football with him. Crazy dude, and it's crazy to see him
nice.
just blowing up like that. But
Yeah,
yeah,
he's up
from
here. He's up here in Denver now. I think.
that's right,
He was training in Denver there for a while. I don't know where he's at right now, but
right.
yeah, I mean, small world.
All right, so we got Tanner at Tanner. You tell us a little bit about yourself. What do you do? How did you get? Well, not how you get started first. What do you do, man? What as an entrepreneur, as a business owner, what do you do?
So I'm a business owner. I own 6 retail locations. And then off of our locations, we invest. We do a bunch of investing. We do retail investment, real estate investment, commercial. We do a bunch of ancillary investments or offset investments like Bitcoin, stock market, mutual funds, IRAs, bunch of different investment. But the goal for me is mainly to get my business to pump out cash, do good in my business, and then take the profits, multiply my business off the profits, but then also transition them into assets. And I think that's what we'll talk a lot about today is why you need to put your money in assets versus keeping it in a bank versus buying new car versus whatever you think that you need right now. You need to put your money in assets to help float on this inflation that's
Right.
coming.
Before we get there, they want to know where what brick and mortar businesses.
Yes. So I got vape shops.
Okay, vape shops. There we go. There we go. Okay, vape
Yep.
shops. Okay.
Six vape shops here in Colorado Springs, and we're kind of branching out through Colorado, going into Denver, different stuff like that. But yeah, super successful. We've started them 9 years ago, and kind of it was about every 8 months we could add a new one. There were a couple of times there where we've had a few regulations that made us halt the to keep going with the stores, I guess. But overall, we've about every 8 months, we try and open a new one. We're trying to shift more to about every 6 months to open a new one, based off the cash flow, based off of areas coming available, I guess.
Now look, as you guys probably don't know, I went to NMSU, New Mexico State University with Tanner. That's how we met. Can't talk about that on this channel. It was a fun time. But Tanner, how did you get started, man? How'd you get started in the vape shops? Where'd you get started first? And then like how did you get started with the vape shops?
Yeah, man. So I graduated with you, and I just knew I was like, this isn't Las Cruces isn't where I want to stay. So I was like, I'm gonna branch off. My sisters actually lived in Colorado Springs, so I came to Colorado Springs and tried to start opening up my vape shops. I actually worked at a vape shop and seen the benefit that vape could do to smokers. And so I was like, man, this is awesome. I felt like it was the future. And so then I tried to get investment. I couldn't get investment. So then I realized, hey, I got a degree. I need to get a salary job. And so I looked at State Farm, Progressive, just anyone that would get my POS business degree and make it worth something. And so nobody would hire me. I either couldn't type fast enough or would get to the second interview and then wouldn't get hired. So my dad actually ended up having a job for me on a ranch that he managed. And I was just like, piss on it, man. I got a baby coming. I have to do something, right? And so then I pitched my idea to everybody, but nobody was willing to give me the cash. So I told my dad, I was like, you know what? I'm just going to come up there, work for a couple years, and just save the money and invest in myself. And my dad was just like, well, how much money you need? And I told him, he was like, I'll send it. So it ended up just happening that way. You know, I was just gonna do it, or I was gonna take a risk to try something else to eventually do it. Thank God my dad ended up having the money. It was actually his whole retirement, and he invested it in me, which is a big deal for me. I want to, you know, give it back and then some. And so, you know, I worked really hard, tried to get these stores up and going. At first, I didn't pay myself for like 8 months. Once we opened my second location, I started paying myself, started hiring more people. And then from there, you know, it's downhill. You know, once you kind of get all the little things, everybody say, oh, I want to open a business, but it's hard because taxes, I don't know taxes. What about employee? What about all this tax code and regulation and all this stuff? And it is. I'm not going to lie to you and say it's not. It is. But once you start stepping through those things, you deal with 1 or 2 things a day, you know, and just keep stepping down your day. And eventually in 9 years, you have an empire ready to roll, you know?
Right, bro, I didn't even know that, that's crazy. So, I know people are gonna think, "Oh, this is a trust fund baby, his dad gave him money," but, you know, the thing is, most people who even get handed money lose it, right? 90% of business owners fail anyway. So, I'm sitting here like, "Okay, well, how did you once your dad took that risk, he took a risk on you, so somebody's gotta take a risk at the end of the day." Did that motivate you that he took that big of a risk on you, and what did you sacrifice? Because it sounds like you had to cut a lot of things off. What are the biggest things you had to sacrifice to pour your time and your efforts into making sure the businesses actually worked out?
Yeah, you know, it was a huge weight, you know. I had multiple family members telling me not to take it, you know. And me and my dad have a really honest relationship. He literally told me, "Hey, none of this comes back. It was a good investment." He tried to take the weight off my shoulders because I'm sure he knew just it was gonna come, you know. Like I said,
Right.
most people would say, "Hey, don't, you know, don't take family money," and I probably would even say the same thing. Me and my dad's relationship's just a little bit different than most people, so you know we were able to definitely like he was able to benefit from it, and I was able to benefit from it. Basically, some of the sacrifices that I had to do. What I did is whenever I graduated high school or college, I went to work for my dad, and I had whenever I graduated college, I had about $2,000 of student debt, which thank God, you know, only $2,000 because we went to NMSU, and so I paid that off, but I was broke then, and so then I went to work for my dad, and I knew I had a kid coming, so I worked for him and saved $5,000 through the summer. And then then I was, like I said, I was going to try and go get an investment. I try and get the investment. Nobody would give it to me. Once my dad ended up giving me the investment, I had $5,000 of my cash to sit on. So I didn't have an investment. I didn't have $50,000 to throw at the shops to help make it right. So
Mhm.
I just had to use free labor. So what I did is I used my time as labor for free for the business. So that's what I was saying. I didn't pay myself for 8 months. The reason why I didn't pay myself for 8 months is because if I took $3,000-4,000 from the business, it wouldn't be alive today. And that's part of the sacrifice of an entrepreneur. You know, you upfront sacrifice for long-term gain, hopefully. And in the end, it might be you worked 8 months and it fails and you're bankrupt and now you're in the whole 50,000 and is what it is.
Right.
That's the risk of an entrepreneur. But the gains of an entrepreneur is if you can figure out the game, then you can have something that trickles you cash for as long as you can hold it up, I guess.
Hey, what year did you start that? Because I wanted to ask, do you think today would be much harder to start a business like that, the financial conditions we're in right now, versus where you were when you started?
You know, yeah, it probably would be. I started it in 2015. And yeah, today it would be a little bit harder. I gave away half my business for money, right? Looking back on the hindsight, the best investment wise is just go to a bank and get the money for no percentage of your business, just a little extra cash. You see, the issue with that right now is cash is super expensive, and the issue with small businesses is it, the expense on the cash. Obviously Amazon feels it, obviously everybody feels it, but they don't feel it like a small business owner, because a small business owner, like I said, if I didn't work for free for 8 months, we wouldn't still have the stores,
Right.
because that $3,000 times 8 months, $24,000 that you can get to leave in the business, that helps get advertisement, that helps get extra product, that helps pour gasoline on your business. So if you vacate that money, then you don't have it to grow the business. You just want to always have money to grow the business. I have a rule: if the business needs anything, it takes all the money. So
Right.
at the end of the day, the business floats first. We look at the business as a individual person. If we borrow from the business, we give back to the business. We don't ever steal from the business. We treat it like a person, because the business holds everybody afloat.
Okay. All right, Tanner, appreciate it. So what specifically, you've been on this journey, you've seen a lot of things. What specifically are you invested in, if you don't mind sharing?
Yeah, no, I'm really invested in real estate. That's probably my biggest portfolio holding is real estate. I do the mutual funds, I do the S&P, I do the safe investments, because I'm not like Jeremy over here and looking at these charts all day. Um, but I do the safe investments, the long-term investments is what I do. I'm a business person, so I try not to get so in the minutia of, is this uh, candlestick going to go this way or this way. Try and look at businesses as totality. In 5-10 years, is this business can go up or down. I try and look at businesses as when's a good time to buy, when's a good time to exit.
Mhm.
um, Me personally, right now, I had just sold all my stocks, but like, I don't know, not that much. I mean, I still got a lot of stocks, but I got them in Amazon, Apple. I'm going with the big guys right now, because the system was starting to wobble. And my thing is that the cash is so expensive right now that if you have cash, you could land it safely for 5%. And I do think that that's what's happening to some of the stocks, is they're getting competed with bonds and even money markets and easy investments, where people could just land their money instead of taking a risk on some bonds or on
So you
some stocks.
do you say you did sell all your stock?
I've sold 70% of it, I'd say.
Oh, okay, you sold 70%. Okay, you're not that dumb, because you
No,
kept
no, no, no.
the guys
No,
who
I took a loss too, dude. I'm not gonna
Oh,
lie. I
yeah,
took a loss. I bought into some of these companies that I thought were gonna be, you know, bought into them 2-3 years ago, probably at the top. They've came down. I've took losses from. I'm just not willing to see them all go to zero. I know
right.
or I don't know. Don't I'm not that arrogant. I don't know. I think what's going to happen is going to whoop these small businesses. I think what's going to happen is going to hurt the average American consumer, and I think that it's um, it's very greedy at the top of why it's happening, and I'm not willing to take the roll down with it. What I want to do is I want to be cash rich. My goal in business was to be cash rich in June, because
Mhm.
that was whenever I was like, last about this time last year, I was like, let's be cash rich in June, right? Because everything was kind of falling to, we're gonna come to a head in June. Well, we've had, them trying to hit that soft landing, and it's kind of like keep kicking that can down the road, right? And so eventually I feel like we're gonna have a drawback, and then I'm gonna try and influx cash then, because it would be better. It would be better in my position. I can trickle cash little, but in my position, it's better to wait for them to drop and strike hard when they drop, if that makes sense.
Yeah, so you're waiting for the collapse. Let's take a look at that. Sounds like you're pretty bearish on the market, right? Let's take a look on it. So, You're waiting for, I mean, I'm looking at S&P here. We're not gonna look at, anything individual. Actually, we can do
Right.
that. But you're waiting for this, right? Are you waiting for, like, I know you're not familiar with this, like a big draw, like a small drawdown? Are you waiting for like new lows or back to the lows here? What are you looking for?
Yeah, so I'm really more looking for 2020 lows, or not 2020 lows, but what was the norm of 2020 and what would that have trajected to today if there wasn't all this propping up of the system?
So
Um, go
2020, like you mean the 2020, 29, like pre-pandemic or post-pandemic?
pre-pandemic.
Okay, pre-pandemic highs for the S&P. Well, let's go to S&P. No, we'll stick with the SPY. Everybody watches this. It was about 340.
Right.
This was about the pre-pandemic that we had the pandemic. There was a big drop, right? Let's zoom in a little bit. We had that big drop here. So we went from 340, which is about 3,400 S&P. We came all the way down to 220, and then we came back up, recovered, and we got close to it in 2022. It came down about 350. So we didn't touch that. But you're saying, what is, I would say, I guess, what percent or how likely are you to wait for this? Because it sounds like you're pretty bearish. Where's my tool at, bro? Sounds like you're pretty bearish here.
Yeah,
Um,
what my thoughts on before COVID, right? I felt the market had to pull back even before COVID. Does that make sense? So
Before COVID. Yeah, 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 because we were going into the
we
growth
were
was
just,
rolling over, yeah.
I mean, dude, I was buying houses in 2019
Right,
and 2021. The market was on fire. Everything, like, I mean, stuff can just go whenever, whoever it wants. So I'm thinking at that 2020 level that you're saying, that 3,200 or whatever, I think that was like a top bubble, right? And then COVID popped it, but we influxed a bunch of propping up of the economy. It's a bunch of free money. It's a bunch of stuff that, you know, hey, you can have it right now, but in 5 years you're gonna have to deal with it, right?
right.
And now it's about to be 5 years. You see what I mean? And so all this free over leveraged, you're about to start seeing people. I seen this in my own life. I know some people that are very wealthy, right?
Are we talking stocks or real estate here about the over leverage?
We are talking really macroeconomics, right? Because this is what I think. I really think that macroeconomics is like upstream of these stocks. Do you agree with that?
Upstream as in,
As in,
you
if
mean like
if
forward
something
looking? Or you mean like forward looking, like they lead the stock market?
yeah, like, so something will happen in the macroeconomics, and then eventually it affects stocks, right?
No, no.
You
No,
don't think?
I disagree with you.
Okay.
Yes, housing, yes, because housing is very slow because you live in a mortgage for 30 years. It takes time to build, but markets, from my opinion, we could talk about this. Markets, well, stocks in general actually lead macroeconomics. They lead, if anything happens in macro, stocks price it in really quickly, and the macro still takes time. Macro takes time. It takes like 6 months, and then all of a sudden everything hits at once. So stocks
So
will try
let
to
so
price that in.
so let me ask this then. Do you
Right.
think that the stocks are priced in with over leveraged companies?
Have the stock? Yes, yes. The stocks have priced in over leverage companies. Let's go. Let's look. Let me see. Let's look at Target. I mean, I'm trying to think of who, because I don't really look at the bears, but in general, the market is not in unison at all. The market is not in unison. They disagree. That's the beautiful thing about the stock market. It's not all in unison. It's a bunch of different components moving. Some
Right.
areas are much worse than others. So if we do this, right, let's just look at the overall market with different sectors, and then you'll see what I'm talking about here. If we
Okay.
look at, so if we go to energy, right, energy is up. Energy's been up because of inflation. So energy is like almost at all-time highs. XLE, this is the ETF for all energy companies, gas and oil, whatever. This one's not up as much, but XLE is up. If you go to the banks are down significantly. Like they collapse. This is regional banks. They're down 40%. I mean, they're in a bear market, right? So and then you jump over to communication services. They've been rebounding. This is technology. So like, oops, this is going to be technology. They're not down very much. Industrials almost at all-time highs because what? The construction builds on multifamily housing, all the buying from the fiscal policy to buy rockets and tanks and jets to go send to Ukraine. This is industrials. They've been at all-time highs. So the market is shuffling around. The weakness is getting destroyed. This is consumer healthcare, hasn't done nothing. This is biotech. Biotech is literally barfing right now, right? Biotechnology is barfing. Nobody's investing in it. Why? Interest rate sensitive. Interest rate sensitive sectors getting smashed. Rates are too high. They're not even profitable yet, right? Consumer discretionary is up a little bit. Look at staples. These are all Family Dollar, Dollar Tree, what is it? Rite Aid. All these little retailers, they're getting smashed. They're all the way back
Right.
down to where they were in 2022. So the story here is basically you're right, but you're wrong. You're right. There are sectors that are at all-time highs, and you would call them a bubble, but I would say no. I'd say there's reasons why they're up there. But look at real estate. Real estate's barfing. Real estate, literally, this is the real estate ETF. This thing's already back down. This down's 36%. It's down where COVID started to try to recover back in June of 2020. So it's back to levels from 3 years ago. You know what I'm saying? Does that make
Right.
sense?
But okay. Well, this is why it's going to be great for me and you to talk, dude.
100%.
Yes. This is a business person talking to an investor, and a really good investor. You guys watch Jeremy. I watch him all the time. Okay, so do you know what a maturity wall is?
A maturity wall. No.
Okay.
Like refi, like a refi, like
Mhm.
refinancing. Yeah. And I think I already know where you're headed with this. So this is gonna be a
All
good
right.
one.
So let me tell you how this works. I bought a building
Mm-hmm.
last year, right?
Right. Mm-hmm.
$1 million building. The thing cost me $4,000, about $4,100 a month to finance, right?
Okay.
Okay. That building it's a great building. I got a good deal on it, right?
Mm-hmm.
But even at getting a good deal, I'm gonna show you what's about to happen to me. And if you can't pay for this, then this is what everybody's happening. It's gonna happen in big scale coming up.
Okay.
So whenever you buy one of these commercial buildings, they're actually bought on 5-year amortizations. So an amortization, basically, you have 5 years, and whenever they give you a 5-year set rate window. So mine will be like, okay, we got 5% or 4% set rate for 5 years. So I could buy it from 2021 to 2026, and I can have the same $4,000 adjusted rate. If I want to make that, or if the government then raises rates and says, hey, it's now 8% versus 4%, now my debt doubles, or not my debt, but my payment doubles. So whenever I am going in versus 4%, now I'm going into an 8% refi in 5 years. I bought this thing 5 years ago. Now I'm going to have to refi it. And that's going to take my payment from $4,100 to probably over $8,000. Now,
Mm-hmm.
this is on a small scale for a business, right? But
Right.
just think, a bunch of these businesses, especially if you get into the top, businesses want to operate about 10% profit margin, right? That's a good business. If you can hit 10%, you're a good business. These big businesses, Target and stuff, they operate in 2-3% profit windows.
Small margins. Yeah, they're getting crushed.
Small margins.
Right.
So if you take their buildings, think of how many buildings Target has. Think of how many offices Target has. Think of the higher ups. Think of all the stuff that they bought, thinking that rates were going to be 3-4% forever. And then now they're going to have to refinance, literally coming up. Literally right now, they're going to have to start refinancing at 8%, right?
Right.
So
Oh, you got that chart?
yep, let me pull up this chart real quick. This is the maturity debt right here. So this right here, time left and maturing US junk debt It doesn't peak till 2029.
Mhm.
Now, what I'm thinking is gonna happen, right? Is if we've ticked up to 8%, and say Jerome Powell just said, we'll go one more, 8.25, right?
We talking hold on, 8%? What are you talking about? Mortgages?
Mortgage, yeah, debt, a cost of money, basically, right?
Well, hold on. Let's get it. Let's make sure we got the right rates here. Fed funds rate is at 5.5, but
That's
that
the
also
Fed's funds rate. What
right,
can you borrow money with? Fed fund rate is what the banks borrow money. The banks have to make money too. So you borrow
right.
at 8%. Over 8% is what you borrow their money for. So the
So we're
banks can borrow at 5%. You can't borrow at 5% because
so we're
the banks borrow money from me at 5%. So they have to make money off of it, right?
right. So you're talking real estate basically, 8%
I'm
for real
talking
estate.
commercial real estate. This is not residential. This is commercial. But this is what I'm telling you about stocks is because every company has asset. If you're a small business like me, you might not have commercial asset, and it might not like different things will stress you. This is going to stress the big people because what ends up happening is Apple will have a building that costs, I'm not joking, $100 million a year, or 100 let's say it costs $10 million a month, right?
Right.
They're going to have that same building now cost 20, 25 million dollars. Well, they don't only have one, they'd have five, six. Eventually you can only stress a business so much before they can collapse, or they're going to have to start laying off or stop marketing. Something's going to happen. So it can only come to a head. Well, if we tick these rates up, right, and say that you're saying 5.5 on the Feds, and we're all the way at the top, right? Say he does one more rate hike, boom, okay, and we're at the top. Let's say that we all can agree we're at the top.
Right.
They're not just going to jump it right back down. They're going to slowly increment it down. It'll take 2 or 3 years to even slowly increment it. We're at 2023. Any of these 2024 and 2025 people, they have to refi at 8%, 7, 8%. That's going to double their payment. If we can't get this under control, you see that 26, 27, 28, 29,
Right.
that's gonna really roll if we can't get this inflation, or not inflation, if we can't get these rates under control. Well, how can we get the rates under control? The only way we can get the rates under control is if we stop spending money, because you could look at the M2 money supply chart and you can see we doubled the money supply. So we need to suck a bunch of money out, not all the money out, but we need to suck some of the money back out. That's going to cause pain. I don't think that we have a government willing to cause pain to people, to show them, or to be the grown up in the room, to give them the vegetables, to tell them to eat their vegetables and not just ice cream all day. I don't think that we have a grown up in the room. So if we don't, and we keep printing money, then they can't drop them rates because inflation hurts the poor. And then they're gonna, if they can't drop rates, we're gonna have a long time of falling. And
Right.
that is, like I said, that's more macroeconomics for me. Sorry, that's more macroeconomics for me. But I would like to bounce it off you and see what you think.
Yeah, no, what I would say is you are right, but it kind of depends on the position you're looking at. Because if you're talking 2029, well, markets keep going higher until they have to refi. That's if the Fed hasn't cut rates. So I've thought about this situation 100 times. I was looking for the damn chart, but I've made so many reports I can't find it. I'm gonna keep looking for it. It's basically showing that 70% of S&P companies, right? Because you're talking about companies in general, um, which is true. I think a lot of companies, whoever have rolling rates, right? Whoever have rolling, they literally have to refi every month, or they actually not
Everybody
every
has it though.
no. Most 70% S&P companies that you just showed the chart, they don't have to refi till 2029. That's
Okay, so
you hear what I'm
so
saying? See what I'm saying?
yeah, that could be true. You could not have to refinance 1 year properties, but like what is the refinance like? Most of them are on 5 year windows. Some of them, I think that they're on like 7 or 10 year windows. If you're like probably a bigger corporation, they're trying to
Mhm.
pay them off in 15 years, 20 years versus 30 years is what they're trying to do. And I do understand, like you're saying, that some of the stuff can be lagged, but I think that we've been lagging a lot of stuff lately. We've say for instance, we've got the what was it? The college debt. They're starting to pay.
Hold on, let's
Today,
stick to one thing. Let's stick to one topic at a time, right? So what I'm saying here is you're right. There is pain to come, but we had from 2009, we had no collapse, right? Nothing collapsed. Why? Because the Fed stepped in, because they started printing money again and they stole from the consumer and they covered up the debt. What I'm trying to
How
get
much
at
did
here
they
is
print? How much did they print?
uh
800 billion. 800 billion is all they printed. That whole '08 collapse, they've already printed $2.5 trillion.
right. That's what
$2.5
they
trillion
Well,
dollars. They printed.
yeah, exactly. They plug the holes. They just keep plugging the holes for the treasury, whatever. So what I'm getting at here is that
Over
for
leverage.
commercial real estate's in trouble. Most commercial real estate actually refis, from my understanding, 2025. So commercial real estate is in trouble 100%. So all those retailers, right? All the retailers, Target, they're going to be in trouble. So there's some people saying that really this whole shrinkage and shutting down stores because they're getting broken into, they're really shutting down because they can't pay their
Yeah.
loans. So
Mhm.
they're trying to shut down and say it's a shrinkage, but it's really something else. No, who cares? I don't give a damn about Target. The biggest companies in the S&P are Apple, Amazon, Google, Facebook, Tesla, etc. They locked in rates till 2029, very low rates in 2020. They locked in very low rates.
Smart.
Therefore, they're they pump most of the earnings for the S&P. They're not in trouble. They're going to be fine going forward. Now, the closer we get to 2028, that's when again you're going to get more. Okay, are we going to refi? That's if the Fed hasn't already dropped rates. Now, remember, the Fed is set to hold rates all of 2024, which is a worst expectation. But if they start cutting in 2025, let's say it takes them 2 or 3 years, well, now the rate expectations start to come down already. So I don't think the stock market, some stocks, like we said, some stocks are going to be in trouble, but the big monsters, like the blue chips, they're going to be fine. The blue chips will be fine because they're growing faster than the 5%. Like you said, right? Target, okay, 5% margins. Bro, Apple 30% margins, Facebook 70% margins. They don't care. They're growing way faster than the rates. So I would agree with you that a lot of commercial real estate, mortgages, even banks are in trouble because banks literally they're getting their treasuries ripped. They're in trouble. Not the
Banks
big
are in
bank
big
though. Not the big banks, JP Morgan, they don't care. They're fine. They have enough cash flow, but regional. So what I think we're going to see is finally the weakness of the market get shaved off. But that doesn't hurt the overall market because S&P 500 are the top 500 companies. The
right.
other, the other companies, and a lot of in the S&P are going to get hurt too. Those companies are going to get hurt the most. I don't care. I'm not owning those. I don't give a damn. That's why I'm in innovation. I want the stuff growing at 50% a year, 30% a year. I want the stuff with high margins, taking over market share with locked in low rates, and also innovative, have a growth rate. So that's my argument to that is I do agree with you to some extent, but I don't think it really hurts the Qs or technology stocks, if that makes sense.
I think that we're kind of looking at it from the same way, but we're looking at two different things. So
Mm-hmm.
I'm looking at majority of stuff, right? I'm not looking at like one stock. Like we could talk about S&P or something like that, but the S&P even right now is getting held up by 7 companies. If it wasn't for those 7 companies, it would be negative, right? So I think that it is true that businesses are hurting. And when businesses hurt and money's high, then it rolls downhill and it eventually hits the consumer. And that's kind of what I'm trying like. And I'm not 100% sure because I'm not as versed on these stocks as you are. But I would think if you roll it all the way down, I know that the bottom half of the country don't even own stocks, right? Bottom 50% of people don't even own stocks. They just buy whatever they want to buy.
Right.
But isn't it like somewhat if the people don't have jobs, they can't buy stock? Isn't it somewhat if stuff takes a step back, then the stock market hurts? Isn't it somewhat that if the S&P 500 only has 7 companies holding it up, then maybe those 7 companies are really leveraged, but are really good and really got good CEOs, good business plans, all this stuff. But could it be that the rest of them are hurting? Could it be that if we're picking individual stocks, let's say, do you want to be in on individual stocks or out on individual stock? I didn't sell any of my S&P 500 just
Right.
so you know. I sold my individual stocks, and that's kind of where.
Well, who'd you own? Hold on. What were you owning? Because that might have been a smart move or not.
Oh,
Who
bro,
did you own?
I mean, I owned all kinds of stupid shit.
Oh,
You know
okay.
what
Well,
I
there
mean?
you go. There you go.
I'm
Bunch of
talking. I owned EXP. I owned anything real estate. I dropped Zillow. Any of that stuff, I dropped.
yeah, that was
Um,
trash. I agree with you. That's trash. So
mhm.
again, the Magnificent Seven that you're speaking of, 100%. We're right. We're saying the same thing.
Yeah, yeah, yeah.
I'm telling
Mhm.
you, it's a stock pickers market. I guess I didn't say that. It's a stock pickers market. You got to buy efficiencies. The companies who are efficient can hold their margins, those go higher. So actually, you should buy the stock, stock pickers market. You should focus on stocks, but that's a way harder game for people, right? They're not
Right.
sitting at their desk 24/7 like me, looking at the technicals, reading the fundamentals, understanding what they're diving into. That's what I'm here for, though, right? That's
And
why I'm
and
doing this.
and one thing that I wanted to ask you, Jeremy, what are you looking at whenever you're looking at, like, say you can only pick 2 data points, 3 data points, and you're like, all right, I'm gonna see when is it a good time to buy Tesla? When is it a good time to buy Amazon? When is it a good time to buy Nvidia? What are you looking at whenever you're trying to get this? Because I think for the average person, I'm an average. I might have a little bit more money to play with, but I'm an average investor. I'm trying to figure out, like, I'm trying to hit the pits of these and then let them ride up. But what are you even saying to say, like, hey, this one is a good buy right now?
All right, so let's look at the technicals first. Check this out, because this is like the easiest thing to see visually. You don't have to think too much. When this RSI, this is relative strength. This is buying and selling pressure. When it's going up, there's a lot of buying pressure, but eventually it's just like a spring. It gets too high and it comes back down, right? The
Yep.
momentum falls. When it gets too low, the momentum starts to turn back up. So this is oversold down here. This is overbought up here. So just the easy metric, when Tesla first sold, remember when it went to 100, everybody's like, what the hell? Tesla's at 100. Like, bro, this thing was at 400. It dropped 75%. Everybody's scared, but that's when the buyers come in. That's when the big guys come in. That's when I got I hit like 80,000 on TikTok making a video, because I was like, bro, people think Tesla's going to zero, and that's the fundamental side, which we'll get to. But look at this thing. When it gets oversold, what happens? It's gonna retrace back up. So this is a buying opportunity when it's in deep recession, or not recession territory, but deeply oversold territory. That's when you buy, when everybody's afraid and it's going super low from the highs. This is on the weekly time frame, right? Now, another thing you want to notice is the trend, right? So this is just technicals here. It doesn't, so you get oversold again. This is the daily chart where it's oversold. You can see it down here. It's let me
Mhm.
bring it up a little bit. And so if you bought down here in Tesla, I mean, you're up blindly. You're just blindly buying down here. You're up, right? If it's super oversold. Now, when it pulls back, it gets oversold again. Another buying area. You see that? Oversold,
Mhm.
buy another buying point. Okay. Does it get oversold again? Yeah, it gets oversold again here, buying area. So
So we're
technically,
we're looking at it right now. Then it looks like a buying spot, right?
exactly. It's no. Well, it could be,
It's kind
but
of right on the edge of swinging to be
you're
up,
looking at the
but
trend. Yeah. But here's the other part. So you're looking at these oversold. Those are easy ways to buy. Also, the trend. Is it on the trend? And you can see here's the trend, right? Let me take this off and then show the thing. So the trend started here. You don't get a trend until you get really like 2 data points. This one didn't touch exactly, but I might have a different chart on. Let me see. Put the regular chart. You can see it touches the trend. So there's different ways to look at it. But for the most part, it's the technicals. You get a buying opportunity. Once these two things touch, there's your trend. So you're looking for the next trend. Boom, buying. It's at the trend now. It's pretty close, right? Another buying
yep,
opportunity. So those are technical ways to look at how to buy. And trust me, there's more that goes into that for
yep,
sure. Now, for the fundamental side, it's like, okay, well, why Tesla? There's a lot of trends out here. So why buy Tesla? And let's jump through that really, really quickly. Okay. I'm going to show you why. Okay. Number one, yeah, let's just talk through this. 18% margin. So their margins are coming down. They're growing at 50%. So Tesla's growing at 50% growth rate on their revenue year over year. They just came out with deliveries. Damn, I should have put that up there. They have delivered in 3 quarters more than the entire year of last year, meaning there's demand for the product. It is the number one selling car in California, the Model Y. It is the number one selling car in the world. Um, the whole world is shifting to EVs anyway. China, Europe, right, etc. It is the first company. It is the fastest company to $100 million in revenue. Now, I did this presentation about a month ago, so I'm just kind of going over a little bit. Tesla supercharger stations, right? Every EV, everybody is going to the Tesla standard. Who's on here? They made their superchargers. They're more efficient. They're faster. They work better. The technology is better. Ford, GM, Mercedes, Rivian, Nissan, Hyundai, Honda, Acura, and more to come. They're gonna have to use the Tesla charging stations instead of their own. They're just not good enough. They're too far behind. Tesla energy storage system, right? Texas is using two of them. You notice Texas had no blackouts this year because they're using two Tesla energy storage systems that help with they have an AI that help give you energy. Well, not give you energy. It basically takes in solar, wind, all this energy, and it stores it, and then it can send it back out on the grid when the grid needs it, when there's any type of emergency. That's a new energy uh, electricity energy thing that is a big technology. This will be bigger than EVs. The energy segment will be bigger than EVs. Cybertruck is going to be released this month. At some point, there's a lot of demand. There's 2 million Cybertruck pre-orders already. Elon is meeting with India. That's the fastest growing nation in the country, India, and he's trying to put an energy storage system, EVs over there, blah, 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 right? Now you got the data centers, the giant data centers. They have a supercomputer where they're making chips just like NVIDIA, but even more advanced than NVIDIA, because these chips are for self-driving cars, right? Self-driving's around the corner. This will double the stock easily when it comes out. It's going to be monstrous. I'm super bullish on Tesla. Dojo is the supercomputer. It's not just that. He also has X, right? Twitter. So now he can create his own algorithm, just like ChatGPT, but even better because he has he has all the Twitter data to create AIs for augmented who knows what, just like Google, XYZ, full self-driving robotics. Now they got robots in the factories that they've built that are doing some of the work and some of the labor to create these cars. They put in the seats, like they have robots. And then there's a robot they had the other day. It was dancing, it was picking up cups, it was doing really things that you need soft hands for. It was doing those things. So, bro, I could go on and on and on about Tesla, and I'm not really gonna. Right. So I can go on and on about Tesla, but that's just part of it. So that's why, right? You're right. If you don't know about what stocks to get, it is like, well, what do I choose? Because you're going to hear a bunch of hate about Tesla, that they're trash. You're going to hear that segment too. It's competitive, right?
Yeah. No, I'm waiting on it. I want to get a good buy on Tesla too, and that's why I'm trying. I got a lot in Tesla, but I want to get another bite at that cookie, bite at that apple. Do you know why Elon named Twitter X?
He had I don't know the minute details, but he did have he tried to start a company. He tried to start X as a company a long time ago with PayPal, and he wanted to call X. It didn't work because the government like banned the payments. They were doing like this payment thing, and the government's like, hell no, you guys ain't going to be creating a digital currency, kind of like crypto, which is why everybody thinks, is he part of crypto? So yeah, he had that, and it just never materialized.
He wants to make Twitter the everything app. I think it's like, there's a China app. I think it's WhatsApp or WhatsApp. I think is what it is, or something like that. There's a China app that is everything China. So you could bank on it. You can buy. It's like an Amazon, but your socials connected to it. But you could watch. You could buy a pay-per-view on it. It's all in one app, right? And Elon, I think that what he was saying is, if Apple jumps into the car world, he's going to jump into the phone world, right? And so if Elon can make a phone, I could just see the integration. You know how Apple, the reason why I got an Apple computer, Apple phone, Apple everything, it's because the integration of it. I could put my notes on it and it transfers it to this and all this stuff. Just think if like everything social media was not only through your phone, everything banking was not only through your social media, everything, all of that was not only connected to your car. You see what I mean? And it's 100%. Like a whole, the house, and you can chart, the Tesla solar panels and the AI stuff that he's coming into and all this stuff.
Bro, you're right. Solar panels, energy storage, X, payment network, satellites. He has the satellites out there, Wi-Fi anywhere at any time, Tesla insurance. This will be the biggest company in the S&P
Dude, he's already
500.
got the space link. He can make free Wi-Fi in every damn Tesla.
Exactly. It's all coming together. He's 10 steps
It
ahead of
is.
everybody, bro. He
He's
has the
10
space
steps.
rockets 10 steps ahead.
So
That's why I'm betting on Elon, because he's 10 steps ahead. People don't get it, which is exactly what you want to be in the things.
yup,
You have to do your research, obviously, but when people don't get it and they think it's trash, that's your opportunity. This thing's going
yup.
much higher. So that's
Elon,
why.
Elon, let me get into this because this kind of like connects to what we're talking about.
Okay.
The UAW auto
Yo,
strike.
hold
Right?
on. Let me talk to the audience. Let me take a little bathroom break, man. I have a small bladder. Hold on.
And I'll go for it. Let me explain to you guys. The UAW auto strike, right? What they're wanting is they're gonna want 40% raises. They also want 4-day work weeks and paid for 5 days. This will basically raise prices in all American manufactured cars. Well, how does this affect us, right? Well, Tesla had just cut costs $10,000, $12,000 on some of their cars. If what happens in a business is if a business has a bunch of unexpected expense. So say that your employee payroll, which is your biggest expense in a business, goes up 40%. You're going to have to somehow figure out how to absorb that 40%. Now you could say, hey, this greedy CEO should take less. Hey, all this stuff. Well, the CEO just bounced to somewhere else and get more. What ends up happening is the CEO ain't taking less. And to be honest, the people that own the company aren't gonna make less. What's gonna end up happening is all the upfront regulation or cost is gonna get passed right on to the consumer. So these Fords, I know you guys can see these damn vehicle prices. $110,000 for a truck, $150,000 for a truck. You think that's expensive now? Just wait until you add 40% work raise to the auto workers. Just think if you say, hey, if they want 4-day work weeks but pay them for 5 days, just think of what that does. That rolls all the way back to the American consumer. So what will that happen? Eventually, what will happen is all the auto places, all the auto Ford, GMC, all the auto workers, yeah, all the brands, all the companies will fold. Well, what will happen when they fold? The US government will pick them right back up, right? And whose money is it that they're using when they pick them back up? They're using the taxpayers' money. So this is the thing. Before you go out there and say, hey, these auto workers should afford this, just understand you're gonna have to pay the bill whenever the government comes back for it and says, hey, 40% more labor for this car that's already 30% more than a Tesla. And Americans are gonna these American car companies have to compete somehow. And if we're gonna, we allow like Tesla to go over. Jeremy was just saying Tesla to go over and look for different manufacturing and stuff. But we always want our workers to be upheld. Well, we have to pick one or the other. It's either we pay our workers really good and we can give them what they want, and then these cars go up 40%, or we can not and just let these businesses fold, which what I think should happen, which I think should happen to the banking sector, which what I think should happen to everything. This is capitalism. If something fails, something else will fill its place. You don't got to worry about not having an American car company. Somebody will fill its place if they go out. Or a smarter CEO, a smarter business person, a more efficient person like Elon will buy Ford, and then he'll make it more efficient, even on American soil. And that's what ends up happening is I think we have these dinosaurs in this thing. We're always trying to prop them up, and it's like, let capitalism go. Let capitalism just destroy. Let it just all the way out the market, and then it'll build the market back up. But we keep always wanting to hold them up. So I know what's going to happen with this. They are going to fail. There's no way you could put 40% labor cost on American workers. Maybe in China you could put 40% extra on it. Not in America. It costs too damn much. And like Jeremy's saying, if you're a smart CEO, what you do, you start figuring out where you can cut costs. So what you start figuring out, if I have to pay somebody 40% extra, where can I cut costs? Maybe it's not as safe. Maybe it's not as good as tires, maybe not as good as features, not cheaper material. And then you know what's going to end up happening? You're going to stress a business owner, and they're going to end up just buying a AI machine that just does it, and it's going to be $500,000 per machine, but it's going to outpace a human worker. And that's what we're going up against, is because these CEOs, they're not going to just take it in the rear end. They're going to find a way to get around it. And anytime that we elevate the cost of it, it trickles down to the American people. We're already at a spot where people can't afford cars. You want to put 40% on top of that?
Bro, my friend went to get he's trying to start this business where he basically cleans windows and he needs a truck. So he went to go get a used truck. He said the used trucks were more expensive than the new trucks. I was like, "What? 40,000 for a 2019 something?" And I was like, "Bro, what the heck? That's insane." And he's like, "Yeah, they're more expensive than the brand new car, so you might as well just get a brand new car."
I,
And
I, bought, I bought my truck in 2020. I bought it for 22,000, something like that. I
mhm.
could sell the thing. I put 115,000 miles on it. I could sell the thing right now for 27.
Dang, that's a
Yes, and it went up. Like, that's what's happening. But I also think, Jeremy, have you heard of anything about like the issues in the battery manufacturers, or the manufacturing all this battery that we're going to need for these electric cars?
Yeah, I hear about lithium this, you don't have enough this and that. I mean, I don't know it to the T, but I think it's an issue for manufacturers who don't have the right process, So again, I'm bullish on Tesla because Tesla's battery they're doing mining too. They're actually setting up a mine so they can start mining lithium. So they're doing the whole 9 yards. They're trying to go
Yeah,
to very top line, but for most of them, yeah, there's I don't know. I don't know what the exact argument is. I heard it. I don't really care because it's whatever, but there are some issues. Like, they're real issues, but again, the best are going to be able to solve those issues, and most of them are not going to be able to solve it. So I don't know what the argument is though.
I seen this picture one time, and it showed like megabyte of storage, right? And it was
Right.
like on the back of this, like it was like in the 1900s or something, and it was like it was probably like a 10 by 10 machine that held like a megabyte of storage, you see. And now
Right.
you have this little microchip that could hold a terabyte of storage. You see what I mean?
Mhm.
That's what's going to have to happen to these batteries for them to mass scale, because there's not enough lithium in the world, even for our cell phones and all the electronics that we currently are going into, even the electronics. But if you want to start putting in these huge batteries into these cars, there's not enough lithium, there's not enough cobalt in the world to make even like, I'm not exactly sure the science on it. It would be like to make the
Well, bro,
United States even efficient.
no, you're
You know what
right. Right now there's not, but
I mean? Right.
the thing is these batteries, they're working on a million mile battery where literally the same size battery goes a million miles. So they're solving these things.
Yeah,
Number
and
2,
that's what's gonna have to happen. It's just it can't be this much lithium goes the same amount where we have it going right now. It has to somehow, this amount of lithium goes
check
further,
this
you
out.
know?
Hold on, check this out. Also, SpaceX isn't just about rockets. What do you think they're doing? They're gonna mine comets to get lithium, to get cobalt, to get gold. They're gonna go mine it and on the moon and go mine this stuff to fuel the electrification of everything, the 5G, 6G, 8G. They need more chips, they need more lithium, they need all that. And there is lithium. It's just you can't go into another country and take the part of the Ukraine. The whole war with Ukraine is literally they have a bunch of resources. They're one of the most resource dense territories on earth. And so that's part of the war there.
You
So
just
yeah,
gotta make it look like a war zone to get it, you know?
yeah,
So
they're fighting
we
over
got this
resources.
beautiful rainforest. Let's demolish it for some lithium, you know? And
Right.
these are the things that I think that, like, the certain privilege of Americans as consumers, we don't got to deal with. It's like,
Mhm.
well, it is what it is. But it's real life issues. You know what I mean? I mean, I love electric cars. You know, I love the future of what is coming. I hope I like I like the little bikes now that they have, you know, that are electric and stuff that you can, you know, I like the adaptation of it. But I think that if we think that we're like saving the world or something, that we're like kind of misguided. I think that there's slave labor in that cobalt for sure, you know, and I think that eventually we're gonna have to have a scientific um, um, evolvement come to the batteries, and it will. I mean, batteries forever have become more efficient and better, you know. So
Bro,
eventually it
there's
will.
there's literally slave labor and everything. No
Yep.
people's those vegans and those crazy, "Oh, you're doing
Yep.
okay, don't use an iPhone then. Don't use it technology at all." That is the reality that we live
Exactly.
in. What are you gonna
Mhm.
do about it, number 1?
But I
So
think
yeah,
like say I don't know what percentage, but like half the reason people buy these electric vehicles is because they think they're saving the world. You know, I think that it's like, hold up, like, are you really saving the
bro,
world, or are
I
you
don't know
just like
about that.
feeling good?
There's probably a bunch of retards in California who believe that, but most of them are buying it because status. It makes them have more
Right,
status. It's cheaper. It's cheaper to own it over time. It's mostly a status
right,
symbol. I don't think they believe it. I know what you mean though. There's those
hmm
idiots out there. I think it's a status symbol. We're better than you. I think that's what it is. Like, oh, we're not gonna, mess up the ecosystem, whatever. But for the most part, the car is way faster. It goes 0
yeah,
to are you kidding
it's
me?
a
The
better car
slowest
for
car
sure.
is 0 to 60 in 4 seconds is the slowest?
Yeah,
Uh,
2 seconds I think is the fastest.
1 point it's like 1.8, bro. It's insane.
Yeah,
It's
yeah,
1.8. So, it's way better. I mean, it's full self-driving. Are you kidding me? It corrects itself. Like, it's not even close. It's like an iPhone on wheels. It over the
yeah,
air updates. So, over the air update, it's like your iPhone. So, you don't need to go buy another car every 5 years because you run up the mileage. It's on a battery. The battery gets changed out at some point, and they're going further, the million mile battery. So, it's a better technology by far. Either way. So, UAW strikes, who benefits?
the laborers, you know, the people
Tesla.
that oh yeah, 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 for sure. No, and that's what I was telling you your people on there. That's why I wanted to bring it up when we were talking about Teslas, because Tesla
Right.
just cut costs. These people cannot cut costs. These American manufacturers cannot cut costs. They have to um the government has to subsidize for them to even be in business. And so why
Right.
are they in business? We should just allow them to, okay, it's your last put, this is your last underdog on the swing and we're out. You know, you can't just keep giving these people uh that are in a capitalistic society and make their own decisions on, do I do this with my business? Do I do this with my business? And we bail them out as taxpayers. That's asinine. You know, why don't y'all bail me out from some of my bad investments? I just invested in stocks and lost $15,000. Why don't I get bailed out for my bad investments? You see what I mean? It's
Bro,
like
look at
Elon's good
the only
investment.
reason people even invest in these companies is to get the dividend, or else nobody cares, because check this out. Ford, bro, Ford's at the same price they were at back in 1993. Are you kidding me?
Oh
Like, who
my,
nobody wants to own this.
oh my God.
GM, look at GM back to where it was. I mean, this thing was here in 2011. These are trash companies. They're not really going anywhere. VW actually has an edge, I think. I don't know what the ticker is, but most of these companies are going to
Pull
Toyota's
up
okay.
Tesla. Pull up Tesla. Y'all look at the difference of an entrepreneur versus a dinosaur that just gets leveraged in by the government. This is what happens, and this is my biggest thing is, you know, I was talking to you last time on Oliver North on, you know, that Richmond or Northman, and I was telling you about how he's talking about he's not wanting to attack the rich, he's wanting the government to be more efficient, and it says I'd seen Patrick Bet David's podcast, and he says for the government to send a rocket to Mars, I think it was either the moon or Mars, it'd take um, $1.8 trillion. For Elon to send that same rocket to the moon, it would take $300 billion. And so that just shows you the difference of the waste in the government versus the efficiency in the private sector. And I'll tell you why the private sector has to be efficient is because it's our money on the line. The government doesn't have to because it's your money on the line, and they could just
Right,
tax
right.
people
They don't give a
more. They
damn. There's no threat. There's no threat. They don't have to
exactly.
lose. They have nothing to lose.
So they could just print out, they could just hurt the poor. The best thing that this country can have right now is a strong middle class, and that's what they're voiding. So if you're poor, you can live because we're going to take care of you, you know, whatever. If you're rich, you can live because the assets are inflating so much that you can just refi all your assets. Well, if you're in the middle class and you have a set income and you're working at 50, 60, $70,000 a year, and you're literally at the top tax bracket because you don't got a business and you don't got all this places to manipulate the money, and that's where the government is targeting, because they know they can't target the businesses because the businesses are more, they could target small businesses, but once you get into a certain amount of business, if the IRS comes from me, they get a lawyer. You see what I mean? If the
Yeah.
IRS comes from like a small barber shop, they get them just willing and dealing with them. Hey, you guys owe $10,000, and the barber shop will say, shit, okay, I'll pay it. You know, they come to me and say, hey, you owe 100 grand. I send them a lawyer, you know, and say, no, I
Right.
don't. And you're gonna fight me in courts and stuff and at the end of the day, I'm gonna get less than the 100 grand. And so the government understands that they can't really take it from the businesses, because if they take it from the businesses, the business owners are gonna profit. So if they have to cut, it's just like we're talking with Elon. If he has to cut whatever, if he has to go to India to get cheaper labor, if he has to, whatever the manipulation that Elon has to do, he's gonna do it. And that's in the private sector. If you give it to the government, they're inefficient as can be. If you put it in the private sector's hand, they are very efficient with it. And that's what I think. I think all these problems, we should let capitalism solve them, man. Hey, homelessness, $1 trillion to the first person that can solve homelessness, you
Oh,
know?
I know. Yeah, yeah, 100%. Yeah, making
And I
money for
think
that.
that I think that's better than spending $1 trillion on homelessness. Does that make sense? It's like put
Yeah.
a reward out there to be like, if you can solve 50% of this shit, $1 trillion is coming your way. And there would be people like Elon and like Bezos and some of these bigger people that have the resource, have the knowledge, have the edge, have the efficiency, have a leverage, and they're going to be able to solve some of these problems. But the government just doesn't solve any of them.
Check this out. I think you're gonna like this labor force. Where is it at? Demographic. So this is working age population. This is working. Oh, not that one. Working age population from 15 to 64. 2000. Okay, from 2000. This is 2000. No, this is all the way. Okay. So China, the working age population in Europe, China, Japan, all declining since after the pandemic. Right. Well, they're not declining yet. This is actually a forward-looking chart, but they're all projected to go lower. The US is projected to go higher over time. I think India is one of the only other countries. And basically what you're looking at here is that the old guard, China, Japan, we're in a shift. We're in a global shift. They're dying out. Europe dying out. They're too old. The baby boom population is done. So we're in a gigantic transition. That's why when you look at markets, when you talk about markets, and this doesn't cover everything, when you say, oh, well, the debt's too big, I'm telling you, it doesn't matter what's going to happen in the economy, because there's gigantic shifts and all that money is going to go to whoever helps the economy survive. And it's going to be Tesla, it's going to be Amazon, it's going to be Apple, it's going to be Google, it's going to be crypto. Even though people don't see it, it's going to be crypto. Not
Mm-hmm.
99% of crypto will go to shit. I'm
Yep.
talking about the 1%, right? Populations from the 18 to the 2100 projections based off this, what China moved up. Okay, the one I was looking for, oh, here it is, world population. So the biggest population boom, annual growth rate happened in I think right after World War II. Why? Because we printed a bunch of money to build the atom bomb, right? And then we spent all kinds of money. So the population boomed. Everybody got back from the war. They had kids, they had babies. And then we peaked in like 1970. That's when they started all the feminism and stuff, because what they're trying to do is get women back in the workforce, because they printed a bunch of money and prices would skyrocket. So now you see that growth rate is falling like a rock when it comes to population, where the world population is still moving up, but it's at a slower pace, right?
Right.
And it's at a much slower pace. But the whole point is, look at these fertility rates. This is fertility rates just from 1960 falling like a rock. What's going on here? This is probably government. Now we're kind of getting a little bit into off, but this is the government, I believe. Not just the government. I don't want to say the government, the deep state, whatever you want to call them.
Yep. That's what it is.
Worldly, there's too many people. There's too much debt being grown. Therefore, you have to eliminate population so that there's more GDP to go around per person. If there's not enough,
Mhm.
you have crises, right? You have crises there. You print more. If you print more, you go in, you have more financial crises. You have a bigger, so they're eliminating the population over time, not like destroying them, but they're lowering the birth rate because there's too many people. And really, the issue is not too many people; it's crappy capital. Capital's going into the wrong areas. They're trying to fix it by population going down, but really, you want population up. You want a hard working class, but they don't want that because the middle class gets stronger, less votes for them, right? So
Yeah.
going back to that,
No, I think that at one point in Rome, in the Roman Empire, they had indoor plumbing, and then at one point after that, they didn't. And what happens with that is, Americans love to, I went to Destin. This is a perfect example. I went to Destin, and I'm going into all these places, and they are all immigrant ran, or all the stores are immigrant ran. So I'm talking to the people, and I'm like, what's like, is there not like very many people that live here or what? They're like, no, there's X amount of people live here. They're just all too rich to live in this spot. So you have to import people to like work like a grocery store job or something
where's
like
this
that.
at? Where?
Destin,
What the hell is
Florida.
that?
Destin,
Oh,
Florida. So it's like that place that everybody goes. It's got the Emerald Beach, and it's a beautiful place.
okay,
But it's like a richer place. You could tell like a bunch of investment properties there and stuff like that, right?
right.
So they're having to import people because the rich people don't want to do the jobs. Even the kids of the rich people don't want to do the jobs that are needed in the society. So what ends up happening, why I said the plumbing, is because what happened with the Roman Empire is they had enough people to satisfy all the stuff that they needed. So then they were able to be like, hey, we need indoor plumbing. Well, what does that come with? We need some, like people that can deal with it, people that clean it out, people, to do all the stuff. Then their population declined, and they didn't have those people to clean their toilets no more.
Right,
So
right,
then what happens is these privileged ass people have to then go do the jobs of the poor, or of the people that they were paying to do it, before. And
right.
so I think that I don't know, on the pot, there's tons to this. There's what we're eating, there's what's in our water, the
Gender
chlorine,
roles, gender roles. That's what collapsed the empire. We know that.
testosterone low in men. If you wanted to, you're a health guy too. If you want to test every man, 90% of them low in testosterone. So I think that a lot of this is kind of what it is, but I do think that there is a part of it that, like I said, it's kind of more of like a liberal feminism, I guess is what I would call it. But it's more of like you're trying to be like, I want to save the world for not doing this, and I think that it's going to actually hurt the world for not doing this. We're people, man. It doesn't matter what species there is. All species are trying to
Bro,
procreate.
you're right. It's like it's literally the feminization of society where you need both balanced, but the truth is if you have too much,
Hmm.
softness, a woman, right? When she has a son, she loves her son. If he's going through a hard time, you're okay, you're good enough, everything's gonna be okay. Blah blah blah, comforting them because that's what they do. That's how they're wired. But it's not true. The dude has to become something. He's not good enough. He has to work harder. It is true that he sucks at this. It is true he needs to lose weight. So once you have the society not criticize enough and not give enough effort, like not praise for effort, instead praise for being a victim, or instead take away. In California, they're removing honors programs for students because it's racist. Because no, get the people who can't read better, but you're spending all
Hmm.
your damn money on stupid programs to make them dumber instead of to teach them math. In
Yep.
Baltimore, they spent $1 billion during COVID. This stuff pisses me off. We're not even on this topic because we'll get banned. No, I'm just kidding. But in Baltimore, $1 billion goes to the school system. $1 billion goes to the school system. Some black lady, of course, it was a woman. And I'm nothing against women, but women leaders are not. They typically fail because they don't work hard enough and they don't understand what it takes in general. Not all of them. There's a lot of Kathy Wood. Kathy Wood's one of the best investors, and she's a woman. but she has actual statistics behind her and she does work. Anyways, Baltimore, what they're doing is they're using all the money to brainwash the kids in their social studies and blah blah blah. Bro, not one high schooler was math proficient. We're not talking high, was proficient out of 18 districts. So this lady's getting paid
Mhm.
$450,000
Yep.
a year. No one's proficient. $1 billion of COVID fund. That's what's screwing our damn country up. I don't want to say it's women, it's stupid leaders who are want to get elected by pleasing the average person instead of telling the average person, get up, get better, do better, look at your mistakes, get better. Instead, oh, it's okay, it's not you, you're not good enough. That's the issue right now for society, I think, is there's no fathers in the home, and I know this is off topic.
100%.
There's no fathers in the home. Number one, you became successful. Your dad was there for you, right? Me,
Mhm.
I guess I'd say I'm pretty successful. I have a complex. I'm like, hell no, I'm not good enough. But my dad was there. I had my dad in my life, right? The dudes
Yep.
who don't. I was a teacher for 5 years. The worst kids who had it the worst, who had mental issues in classrooms. They had no father. There was no father figure. When there was a father figure, even if it was just a grandpa every other day, they were better. But when they had
Yep.
none, they were screwed. They were freaking screwed, and it sucks, but that is the issue. You're incentivizing men to be out of the home, incentivizing what is it in the black community, incentivizing if we see a man, we're not going to give you your home. It gets into all kinds of stuff. So we
Yep.
need that back. We need those gender roles back more than anything, because automatically the masculine will correct the issue. You're not going to let your son be gay. I'm sorry. You're not going to let your son be gay if you're a man. Women will. They'll let him
Yeah.
transition. Men don't let that happen, right? Your daughter,
I,
she ain't gonna be doing OnlyFans if you're a man, but if you're a woman,
no.
you'll praise it. Men will never do that. So, anyways, I know
I
it's a
think
little off
though
topic.
there's like so who's failed though? You see, like we're talking about women right here, but men have failed. Do you see what I mean? Men aren't in these, and we it's always a two-legged debate, right? So it's like, well, the women could do this better, well, the men could do this better. The men aren't there. I don't know the exact stats. It's something like 80% of black male or black kids are growing up without a male father figure.
Right.
It's over 50% for whites. Shit, 10 years ago, it was something like 60% for blacks, 15% for whites. We're going in the opposite direction of good. And I think that what it is obviously like, they're the feminism, the power of the women, and all this stuff. Women will follow good men. Good men need to be awakened. And I think that good men kind of gets fall, oh, well, I can't say this because of this. Oh, I can't say this because of this. You're a man. You can do what you want. You know what I mean? It's America. Obviously we do have cancel culture and all this stuff, but at the end of the day, I don't care to be canceled if it's about my kids. My kids are the one thing that I will stand for, and I will walk into any school board, any meeting, any principal's office, those are my kids. And so I think that to take the onus back on the male to be like, that's my kid. And I'm not going to let the court say it's not. I'm not going to let nobody say it's not, because that is my kid. I also want to tell you something. There's this
Wait, hold on, hold on,
TikTok.
hold on. Yeah, I hear you. Hold
Okay,
that
go for
thought.
it.
You're right. You're right. But the guys who are not showing up, they were raised by women. There was no guy. So it's a cycle. It's a cycle. You're right. The men
Okay,
suck. The men suck too.
right.
But that's because there's no men in their life. So it's like, oh, where does it is it the chicken or the egg? Well, I'll
Yep.
say this: who opens their legs? Men
Right.
don't force that. So women have to make better choices about who they're mating with first, not
Yes.
do it. Stop doing it
Yep.
with retards and idiot guys that are losers. Let them die out. Let them not have kids. So they got to choose better also. I'm not saying men don't have
True.
responsibility. They're freaking fat losers, but most of the time they were
Yep.
raised by no man. And then the woman, hey, make better choices about who your mate is so you have a sustainable father, like you said. Choose the right guys. Choose the right guys instead of the top 1% on the side. That goes into a whole other conversation. But yeah,
But that's
100%.
what's happening right now. It's the
Right.
1% of males can get all, like, I have 40 employees, right? All of
Mhm.
them, almost all of them don't have a father in their life. Almost all of them might not even have a mother in their life, dude. It's a fail of the parenting that is collapsing the system, because it's just like you're saying, everybody needs help eventually.
Right.
Eventually you can't do it all on your own. I've got tons of help. I cannot do what I do on my own. And if people weren't able to, like, if I couldn't have took that risk, because I was so stressed or I couldn't do it, I wouldn't be in the position I am today. You see what I mean? So
Right.
it's like the uphold of the father figure from
Mhm.
males and females and males needs to be important because it's very important for your kids. It's very important for how they're raised. There's a thing on Patrick Bet David. I don't know if you've seen it, but he just goes through it and he's talking about fatherless homes and he's saying 80% more likelihood to have a kid out of wedlock or have a kid under 16, 80% more likely to go to jail, 80% more likely. And that's just with the father. And then he takes the mother out and he says, but they're the exact same if the mother's not out as a dual couple. And what that says is there's certain things that the mother brings that the father really can't bring, but there's also in turn certain things the father brings that the mother cannot bring. And if you don't have that yin and that yang to the child's life, then they're not going to grow up in how it's
Stable, yeah.
supposed to work,
No, 100%, 100%. I agree with you. Look, for mothers, I'll put it this way. It's not 50-50. It's not equal in my view. I was a teacher. I've literally got my master's in this family child science, and I didn't agree with half the bullshit they preached over there. What it is the child needs the mom for the first couple years. 2 years
Yep.
old, 3 years old. They need that
Nurture.
that nurturing, but once they start getting to where they're like gonna start hitting you and cussing and get a little violent, they need the dad to whoop that ass. That's what they need
Yep.
to come in there, and that's just proverbial for discipline. They need the guy to say, "No, that we ain't doing that," right? So they need that. I also advocate. I think most schools should be co-teaching. It should be a male and female in the classroom because females are great. They but they don't pay enough for males to come in. But there's too many women influencing too many boys who can't. What are they going to learn from a female? Because half of
I
school is
agree.
social. It's not just math. It's social. They need a female figure right now. Usually they get it through sports, but if you incentivize in the government, get pay males to come in there and be teachers, mostly for the social, also pay them a pretty good enough salary to do that. Make sure you filter out the idiots and get a male female in there so you at least have kids seeing both like a co-teacher. That's kind of my take on it there. But yeah, you need
And
both. You
and
need a good
and I
balance.
think the teachers unions are way too powerful now. This shit is not about the kids no more. This shit's about the teachers. It's 100%. They give no fucks. I don't know if we can cuss on here, but they give no cares about the student, which is the reason the whole thing's for. You only care about. It's like me not caring about my customers at all, just caring about my employees. Now that
Right.
sounds good, and it's like, yeah, I could do that to a certain extent, but I can't just full blind just all on my employees and not care about my customers. There's a balancing act there. And obviously, my mom was a teacher, 55 years. She's a principal right now. She, she. I definitely think teachers need to get paid more. This is how we're talking about with the government stuff.
If they're good, dude,
You
I
can't fire a teacher. My,
teachers,
my mom's a principal. My stepfather's a superintendent, or used to be the
yeah,
superintendent of New Mexico schools. You cannot fire a teacher even if they're bad. They have to have something like a sexual assault come out. You cannot fire a teacher. Teachers can leave at midday, and that wouldn't be a fire offense.
right,
It's
100%.
crazy the leeway, the leash that these teachers have to be able to do whatever. I'm not talking about these good. My mom, like I'm telling you, she loves these kids. She still to this day teaches these elementary kids, right?
Yeah.
Just who she was. She was a great mother to me, like you said. When I was young, extremely awesome, right? And I didn't have my family split, so I didn't necessarily have the father figure day to day, but I had my dad. At least he would make every effort for everything.
Right.
And so I had the care that my dad wanted. And then once I got older, I remember it was like 15, 16. I remember me and my dad really hit it off because we started hunting together. And he took me on a turkey hunt, and I was just like, man, I love this. And before then, me and my dad, I was scared of my dad, dude. I never had like, I literally didn't even talk to my dad.
Mhm.
And then whenever I got to like 15, whenever I was grown into a man, I was able to look eye to eye with him and understand a lot. And
Right.
so, a male could be raised up and then just starts feeling like, well, I don't know, I kind of feel mean right now. And where my dad could be like, well, let's go shoot some guns or something. where a female might be like, well, let's go get counseling. You see what I mean? So there just has to be both in the system. I
Mhm.
want to jump back though to what you were saying on the or how we were talking about the amount of people or the fertility rate and stuff with
Yeah.
everything. Um, I watched this video on TikTok, and it was a great video. I'll send it to you if I can find it again. It talks about the ebbs and flows of the most powerful nations at any given time. So it could be the Roman Empire, it could be the United States, as we have it right now, right?
Right.
So it's this awesome chart. It's like a 5-minute video or something like this, but it just goes into the layers of it, right? And
Mhm.
so kind of a few things that they were talking about is, on the way up, you're getting good and did it all stuff, and then you start becoming where your labor's worth more than neighboring labors, right? Well,
Mhm.
you have all the ideals in your country. So the analogy they gave is a hammer. So say you created a hammer, you
Wait, hold
made
on,
the
hold
hammer.
on, hold on, hold on. You said the labor is more expensive? Hold on, I got kind of the labor what?
So the labor becomes more expensive in rich countries,
Okay, okay. There we go.
because the poor countries could just knock the labor off, right? So you get in a rich country, it's going to be more expensive to build that hammer than a poor country can. So it's
Right,
going to cost $3 for our hammer in the United States, right? Well, it's
right,
going to cost this other country knocks it off and does $2 because they don't have all the regulations and stuff. Then this next one knocks it off and does $1 because they don't have all the regulations and stuff. And so then they start stealing your stuff.
right.
Well, because they don't have no government regulation on their country. And obviously, if you were poor, you'd do it too. So you steal somebody else's idea, and now I'm selling this hammer for $1, right? Well, eventually, the ideals get stole from the top, right? From the top country, and then they're getting like devalued or cheapened in other countries. Well,
Right.
what ends up happening is once you kind of plateau at the very top of all this, there's an addiction to sexuality or sex. It's kind of weird because what happened in the Romans is they started trying to have little girls have orgasms in school. So it was like they were trying to like put some science that it was good for a little girl to have an orgasm every day, right? So then they started doing weird shit with kids in the classes. And then the cross dressing started, and a bunch of stuff happened with the moral decay of the fabric because people really don't have nothing else to do. So it's like, I don't got we
Are
haven't
you
had a
talking about
war in
you're talking about the
years.
richer countries?
Yes, the
They were
rich
bored?
countries.
Okay.
Yep. So once they get at the pinnacle at the top, because it's a cyclical cycle, once they get at the top of it, then everybody's poaching their products and they become kind of a little weird, very sexualized is what it is, right? And they start doing just weird stuff like that, which I can project to our culture, and it's close, right?
Right.
What ends up happening then is that once you get to the top, you have to pay all the countries to either not knock you off or to have my back and help me and all this stuff. So this is what's happening with America right now. We're exporting all of our cash. So we can find $6 billion, sitting there. We'll send it to Ukraine. We don't send it to Maui, right? So we export all the cash. Well, why do we do that? Because we have to buy people's loyalty. Does that make sense?
What do you
We
mean
have
by
to buy.
export? What do you mean by export the cash exactly for
We
the
have to
listeners?
export. We have to export guns, money. We have to export resources. Anytime the America exports almost to every country just free money, whether it's for whatever it's for. Similar stuff like Ukraine, you know what I mean? Oh, this is to help with your fires. Oh, this is to help with this. We're like the world's like charity, you know.
Right.
We export as a government, even not even as like charity, as a government, we're exporting to these other countries uh cash and resources is
But why
basically
is
what.
that? Why do you what are you trying to say that we're doing it for free? Because we're definitely not doing it for free. Or are you just saying
Not
it's
for free.
happening?
It's like an insurance. It's a necessity. But what ends up happening is then that top country ends up bankrupting itself because it has so much export, not enough import. I'm talking in like GDP or
Yeah.
like in so say something happens where you have to go to war and it costs money, you see, and so you're like paying like Nigeria or something to like have a station there or something, you know what I mean? Or
Right.
you're paying, you're just like, we're being the world's
Well,
charity
hold
on
on.
export.
Typically, we Saudi Arabia, we have a deal where our military is over there to protect them from the Middle East. They pay us to keep our military over there. So I know this
Okay.
topic is, there's a lot of stuff out there on this topic, but the US, the only thing that we actually export, because I think you're saying we import everything. We don't export anything. We actually import. We're always
I'm
buying other
talking
people's stuff.
cash. I'm not
Well,
talking
we
about
Yes, yeah, yeah. We
what.
export US dollars. That's what we
Mhm.
export. That is our number one
Exactly.
export is US dollars. And the reason we do that is to keep the dollar dominant, is to keep the dollar up. It's really for economic reasons. Because if
Yeah.
everybody has to, if we put our military out in the world and then we're forcing people to trade in oil, and that what that means is the US dollar is strong because they have to use the US dollar. Therefore, the central banks and the businesses inside those countries, they want dollars. They don't want their home currency. So then the central banks need more dollars from the US. So we're always sending them dollars in uh trading them for a certain policy. You guys do this, we'll give you the dollars that you need. Right. So
Yep.
I'd say it's a business. I don't know what you're getting at there. I just wanted to
Okay. Well, you
clear
you
that up.
you can say it's business, and I might even agree. I agree. Like I understand that you need dollar debt to back your dollar currency, right? Somebody's debt is somebody
80%
else's
of the 80% of the world is indebted by US dollars. That is why we
debt.
export dollars. They're all stuck on it like it's we're addicted to coffee. You need
Yeah.
it's the caffeine. They need the US dollars. If they collapse, if they don't pay their debts, guess what? The dollar gets more valuable because you just remove the supply of dollars in the world. And
Right.
this isn't even owed to the US. This is owed to each other. They owe each other dollar dominant. And I know this is like a
Right.
messy subject, so I'm just trying to carve
No,
up
no,
a
no.
little bit more context. That's it.
Yeah. No, no. You're doing great, man. And this is exactly what I like from you. You know, the what I'm saying is that in military power, we give other countries aid. Would you agree?
We don't give it to them, we trade it for something.
Okay.
Yeah.
Okay. Well, same thing. So say I have 100 assets. Does that make sense?
Mhm.
I could trade my assets however I want, but I could be stupid with my assets and over leverage
Oh,
myself.
okay, okay. We're not
Does that
getting
make
a good
sense?
deal. Are you getting out the US is not getting a good deal out of it? Is
I,
that what you're saying?
I'm not even talking about that. I'm talking about
Oh.
inefficientness. So what ends up
Oh,
happening is the government becomes so bloated that at the top of their power that they have to export so much money just for the security reasons of, oh, well, we told this person we do this. Oh, we told this person we do this. And everybody's trying to like grab at you to pull you down. So the insurance from the people pulling you down is to pay off all these other governments to align with us, I would say. And like you said, it could be a business deal where you're like, hey, this is a good business deal.
okay.
Well, I'm
I
just
get what
I'm
you're
just
saying.
talking about this. I'm just talking about this thing, and it's a history of all these countries that have went really big and then collapsed is what it is.
Let me
And so what
simplify
I'm
it. Let me
saying,
simplify it. I know where you're getting at. Tell me if I'm right. What's going on is the politicians in the US, whoever's in power, typically give away more than the US can afford to give away to other countries. We're not getting the same in return, but guess who's getting return? The politicians. They're pocketing the cash or the resources or the value into their administrations. They're pocketing, we send Ukraine this many million, they take a cut of that, they get that deal, whether it's in form of pure cash, probably not, or an investment into their company that they own, or an investment into some deal that they give to the infrastructure in the US where it comes back to them. Somehow they're getting benefited from it where the US is not. So I think
and
that's
it
what you're
steals from that middle class. So
steals
it
from the middle
steals
class.
from the
Yeah.
average person because they're sending that money, and then it just makes an oligarchy. So it makes where poor people could live, rich people could live, but this middle class can't live, and that's the worst place to be. You want the strength in the middle class, not the strength on the ends.
Right.
And like I said, I'll send you this thing, and it'll make more sense. I probably muddied it up while I was explaining it, but the 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 idea behind it is every country is cyclical, and every country goes up and then comes down. And the ideas of it is when you're at your peak, when you're at the pinnacle, you become sexually perverse or like it's all about the sex, even towards kids. And then you are over leveraged on your capital, even in like who knows, if I'm not a huge historian, so I don't know if they had better leverage on cash than we do now. I bet you we have better leverage on cash than than the Romans did or whatever, right? And so I bet you we're more sophisticated, but it doesn't mean it can't happen. So our countries could be at the very pinnacle of stuff, and we can be over leveraging ourselves right now. All these debt, how I tell you, $800 billion got us out of that '08 crash, and we're just keep trillions and trillions and trillions and trillions. And so the new trillion is the new billion now.
Right.
You see?
I'd argue it doesn't matter because the US is still the cleanest shirt in the room. Who's doing better economically, right? Every other country has printed during '08. They all did. They all did faster, more. So it really does. Everybody makes this argument: the US dollar is going down. The US sucks. I agree. The fiscal policy does suck, but our country still manages our treasury or our debt better than the other countries. We are at risk for one.
What if a clean shirt came into that to couple onto your analogy? What if a clean shirt, a brand new shirt came into that thing? We got all these stained shirts, and then a brand new white crisp one came out right off the fresh cleaner, which it's called Bitcoin. And what if that can disrupt the government? And I understand like masses might not happen. Let's say 50 years from now, because this is more bigger stuff. Do you think that Bitcoin could disrupt the cash in 50 years, let's say?
Well, it depends. What do you mean by cash? Define what you mean by cash exactly, because we might be talking about the same thing. Because I know you.
Okay, so I have cash, right? And I'm an investor, and I'm looking like, okay, there's a real estate building right there that breaks even right now because the interest rate.
Currency. So you're just talking currency in general?
Currency, yep. So
Yeah.
you have X amount of cash, to Bitcoin. So what I would do is I'd be like, okay, I want my cash now Bitcoin versus I want my cash sitting in cash. And obviously it's the rate of transfer and stuff, which you might be a little bit more savvy on that stuff than me as well. But what if that clean shirt comes and there's no inflation on this clean shirt and it's actually doing everything that you wanted it to do? And would you then think, ooh, the dollar might then have some
I would say this.
competition at least?
The way that I frame it is more so, if you're looking at nations, the cleanest shirt in the room or the most efficient nation is the one who could produce, who can be efficient, who can produce the most with the least amount of cost, right?
Okay.
That's the cleanest shirt in the room. The US has been the cleanest shirt in the room for a lot of reasons, mostly because of our military. You'd argue 2001 to 9/11 was to secure oil transfer and trade so that we can physically, called hard politics, not soft, so we could physically control oil and strengthen the dollar. Now, our debt to GDP is climbing. It's climbing. Nobody cares. Everybody's debt to GDP is climbing, including China. The real issue is who can produce the most and build technology. So the cleanest shirt in the room right now is, it's all about demographics, debt, and technology. Guess who's going up right now? India. India surpassed China, fastest population to grow. India has the most engineers in the world. India has the least amount of debt. India's average population is 35 years old. So if anybody overtakes the US going forward, it's going to be India, but they don't have the military power, which is why I don't think it happens in our lifetime. We have to, but everybody's trying to move.
Strategically align with the military power?
We are strategically aligning with them to get ahead of the issue. So with what I think we're headed to is this global, we're going to get back. It's a different globalism. The world is starting to fragment from the old globalism where everybody's connected through supply chains to a new globalism where they're trying to push China and Russia away and these other Middle Eastern countries and align with somebody. So Bitcoin really has more to do with the fact that central banks, listen, Russia and China have central banks. We're all in the fiat currency system. So no matter what, everybody is debt. Everybody creates more debt to fuel their GDP, to fuel their economies. You can't go without inflation. Inflation is here to stay. It's going nowhere. The question is, who can benefit off inflation the most? China has the lowest amount of inflation because they don't spend as much because their population is afraid. Their savings rate is 50%. Why are they afraid? They don't have a healthcare system, so they have to save money. They're more conservative by nature, but they also don't create babies, so demographics suck, right? Getting back to it, What's really happening right now is the world is realizing that we're going to keep having financial crises, and we're going to have internal political wars, and we're going to lose our power unless we figure out a way to produce faster, cheaper energy costs, cheaper
Hmm.
food costs, cheaper global trade costs, cheaper labor. Our labor is disappearing, so prices go up, wages go up. We need more labor, right? So what are they doing? They're all investing in technology, which is why I'm so bullish in crypto, on really its platforms: crypto, energy storage, electric vehicles, full self-driving, AI. Why? Because these countries have to pour into that to make up for the population. Because if the cost of energy drives from if your cost of energy drops 50%, you now have 50% GDP to now pay off the debt and also reinvest in other technologies. So the race is always for the best superior technology. And the central banks, going back to the money, Bitcoin, what it is becoming the old gold. But before gold went off the gold standard, gold was the standard for the world to trade in. They didn't trade gold itself; they traded in dollars because gold is inefficient. It can't cross borders. Gold cannot move. It
Yes.
just
Oh.
sits there and retains its value. Now we can't do that. Everybody thinks we're going to a gold standard, maybe, but not really. It's going to be a tokenized gold standard, because you can't trade gold across oceans. Pirates will take it. It's inefficient. It costs too much. So what's happening is Bitcoin will become, right now, the world central banks are trying to, it's called the World Economic Forum. They're trying to tokenize all their assets. They're taking their assets that are literally manipulated 24/7, and they're creating private blockchains. Blockchains is a ledger, a record of account that literally cannot be disrupted. It shows up publicly or privately, and it's a way better way of organizing your assets, organizing everything else. And they're tokenizing assets as real estate, bonds, equities, gold, they're even tokenizing. Dude, it's crazy the stuff they're tokenizing. So when tokenizing mean, they're attaching like an encrypted message that shows who owns it, when, where it is, where it moves. They're attaching that to the item, and that thing goes to the blockchain, and now it's on the blockchain. Everybody can see it. It's organized. It's a better ledger to keep a record of things. Who owns what? That's what a blockchain is. So they have private blockchains, and what they're doing is tokenizing the assets so that they can eliminate the cost of trade, the cost of custodians, the cost of the delays. It takes 2 or 3 days to actually transact. They're taking all those costs off. And what happens at the end of the day is, well, who do you trust? They can still manipulate the currency. Well, Bitcoin, if you back it by Bitcoins, which right now they're not going to do, it's too volatile. But once the pension funds come in, Bitcoin cannot be debased. Bitcoin is the hardest asset. Bitcoin is fully decentralized the way gold was decentralized. Nobody has a monopoly on gold. You can argue it, but back in the 1800s, nobody owned gold. You could find gold that nobody owned it but you, unless you got robbed. So Bitcoin, nobody owns it. It's centralized. It's not centralized. It's the most decentralized crypto blockchain by far, not even close. Nothing is like it. So what they'll have to do is say, okay, we're going to own Bitcoin. And if we do lend, we're going to lend off the Bitcoin, because everybody knows it can't be corrupted. It can't be debased. So we're going to lend based on, so Bitcoin becomes your bond market. Bitcoin becomes a bond market. Everything else is tokenized in this asset world. It hasn't came yet. Swift is working at World Economic Forum is working on it. Central bank digital currencies are literally the tokenization of all assets, and stable coins. You've heard of stable coins, right? A stable coin is what they're doing. They're taking their physical currency, they're digitizing it, but not electronic, how you switch through your phone and through Wells Fargo, through not that. They're doing it on a blockchain. A blockchain's way more efficient, way quicker, faster. It settles instantly, and so you have a stable coin to replace the currency, and the stable coin will now be attached to the price of Bitcoin. This is way into the future, right? So that's kind of what we're looking at here, which is
What do
every
you think?
bank's. Go ahead.
What do you think? The government's creating the CBDC now. What would your thought process be on, um, similar to how I kind of think of stocks right now? They're getting a lot of competition with the bond market, with CDs, certain things that are just guarantee rates that we haven't had kind of in the past. So there's kind of some competition. I know I bought your stuff in the past. There's a lot of money out there sitting, right? And I
Right.
agree. There is money sitting. I think that they might be in a kind of similar spot that I'm in, that they're like, hey, I'm sitting on this money, but I'm not landing it on something that's not gonna work. I'm willing to wait a year and a half to land it, or I'm willing to wait a year to land it. I'm just gonna land it in the smartest place, because even if I don't land it, I get 5% on it. You see, so there's not a lot of risk in holding, except tax risk. But I want to know, like, similar to the stocks, the CDC, or the CBDC, sorry,
Right.
creating their new, I think it's, the tokenized, dollar or something like that.
It's all blockchains that are instead of being on an electronic system of finance, it's going to be a blockchain system
What do
of
you think
finance.
of this though? Because this is what I want to get your thoughts on. Um, there's a thought out there that they're gonna try, because we have so much debt, that they're gonna try and say that's U.S. dollar debt, whoop, and then switch, try in some way say, yeah, we had debt in that currency, but not in this currency, and the rate of exchange, like all the stuff. What do you think is going to happen with the CDC? Is it going to be like a Bitcoin where it's just another asset that you could lay your money? Is it going to take over cash? What is your outlook on it?
So that is the question. How are they going to transition into, you've heard it, the what is it, the biggest wealth transfer in history,
Mm-hmm.
or the fourth turning, some people call it, or what do they say? They call it globe. I don't remember the name. There's a bunch of names for it. So
Right.
we don't know exactly how they're going to do it, but most countries their debts are in dollars. So what's probably going to happen here is, and let me try to think this through. So most people's debts are in dollars, and that means they can't just not pay back the dollar. They can't do
Yep.
that
It
because
has to be in dollars.
the dollar will strengthen further and crush their economies, and they'll be worth nothing. Doesn't matter how your politics are. If you lose your economy, you're dead. You're done.
Yep.
Another country swoops in and takes you up. They put in a rogue person, president, blah blah. So
Yep.
what they have to do is get on this tokenized standard, the CBDCs. Bro, China's doing it, Japan, they're all, I have a list of countries who are already creating their CBDCs on Ethereum. It's
Yep.
crazy, on Ethereum, which is why we're bullish on
Yeah.
crypto, or
Yeah.
Chainlink, which I'm even more bullish on. They're creating their CBDCs because what's going to have to happen is you're going to have a basket of currencies. This is the furthest thought. There's a basket of currencies and they all transact together. Therefore, you don't really need to be in the US dollar, or you don't have to own US dollars. Instead, you can have your currency, and when you go to pay off a debt, you don't need to get the dollar. So there's no transaction. It just converts into the dollar automatically because it's on a token system where it's called interoperability. So you can have a you can have a basket of currencies. Now, number two, how do you actually pay off the debt? Because that doesn't fix the debt problem. What I think is going to happen, Larry Fink just talked about this. When you tokenize assets, you can tokenize anything. You can tokenize all value, meaning you can literally tokenize. Let's say you're building an apartment complex, you're a private company, and for every unit of labor, you can tokenize it. You can literally tokenize every unit of labor, meaning you can trade the value of what you're building in real time to somebody else, and they can own what you're doing. You could literally be working a robot on building a building. That building isn't there yet, but it is valuable, and you could trade that value to somebody. It's crazy what you could do on the blockchain. So I think what's going to happen is
I've seen. Let me give you one more example. I've seen an NFL contracts, right?
Mhm.
Where you can tokenize your NFL contract, where say that you want like an insurance plan on it, right? Well, you just tokenize your contract for going forward. Say you're Caleb Williams right now. He's about to be number one pick in quarterback. He'll probably start off making 15 million a year or something like that, 4-year guaranteed contract, then gonna have several $100 million after that. So he could be like, all right, well, I'm gonna take my first 4 years and tokenize them. And basically, the people that give me money can be on a percentage basis on my contract. Does that make sense? So you can invest in the athlete and say it's like, hey, I invested 3%. I get 3% of your contract whenever it comes, and it might be bigger than you thought it was, or it might be smaller. It's kind of like a investment game or whatever. But there's upside for both people. One, Caleb Williams, if he gets hurt, he's got an upside because he can have like money now, and then the investors, they can have it because if eventually he becomes better than you think, it's kind of like betting on it, then you get 3% of his contract, which is bigger than what you paid, I guess, you know. And
Yeah,
so
yeah.
there's kind of like that's token. I just
Those
heard
are
it yesterday.
smart. Those are all smart contract technology. It's all built on
Yep.
Ethereum. And what it is they tokenize anything you see valuable. What could be valuable? How much he bench presses, how many yards he gets in the game. You can
Right.
literally create that as a monetary value and trade it. And what happens is you tokenize each event. You can tokenize any event. If it rains, you can tokenize that. You can literally get paid if it rains if you guess it rained. So you can
Right.
tokenize it and you transfer the value with the message. They're transferring the value with the message, and that message triggers an outcome. So it's saying
Yep.
if this, then that. So you can get that. This is the big,
Yep.
like, this is a huge market, which is why people don't get crypto. Crypto is, if you get the right cryptos, the whole financial system, the biggest game in the town is not real estate. The biggest game in town is not cars. It is not iPhones or what, it's money. It's the business of money. And crypto is literally disrupting the business of money. You just got to pick the right ones. And the transfer of value as a monetary resource has never happened in history, where you
Mm,
can literally, what you could do is you could follow somebody. They're doing this right now. You can follow people on social media. You can buy into them. You can put money into the more followers they gain, the more value your money goes up. It's insane.
mm.
You can always cash out. They say they go to 1 million followers, you cash out. All right, I'm going to get what I invested in them.
Right.
And so you trade your value to somebody else, and then they buy it up or they own more share. You cashed out. But if their followers keep going higher, you just lost out, right? Or you made a good
Right.
trade. You traded somebody's followers. Are you kidding me? So
Yeah.
that is the future with
Like
CBDC, crypto.
stockenizing the real world almost.
Yes, you're tokenizing. It's called you're
Yeah.
tokenizing the real world. Stocks will trade 24/7. This is the future. It's going to take time, but that is the future. And Claire, sorry to answer your question. I thought Bitcoin was decentralized. Why is it being impacted by the strength in the US dollar? It is completely decentralized, but humans still trade the value of the Bitcoin. Bitcoin network cannot be disrupted by anything on its own, but people still sell Bitcoins. There's still hedge funds who are trading Bitcoin. If the dollar goes up too much, it tightens financial conditions. We talked about that, and Bitcoin's going to suffer a little bit, not 1-to-1, but it could. If the dollar spikes, crypto's going lower. And right now the dollar is moving up because 30-year rates, which we haven't even got to, 30-year rates are still going up. Not short-term rates, though. Short-term rates are capped because the Fed's QE liquidity, even though you're told that they're tightening conditions, well, there's still QE happening. There's still quantitative tightening happening in the shadow realm, and that is eating up the short-term rates where long-term rates are going higher. And this might be a necessary force to get the mortgage market to completely collapse. It's not going to collapse because mortgages, nobody's selling their houses, but it's going to crush commercial real estate. It's going to freeze housing. It's already happening, and they're building multifamilies. I think there's going to be a secular shift into apartments because there is no rate risk, right? Apartments, you just pay it, and they're tokenizing apartments. You can also rent and own your apartment now. So the whole world is changing very quickly. This is the fourth turning. We're headed into a new world, a digital world. AI is here. The elections are going to be insane because we're going to see the most. Have you ever seen the Lincoln Project?
Mhm.
Yeah. Well, dude, I saw the Lincoln Project, bro. Bunch of fags. First of all, I don't know if I could say that, but bro, those guys are smart. Hey, those guys won the election for Biden. I just
Yeah.
watched it. Okay, my camera
Yeah.
went out. Stupid camera. Those guys, can you hear me?
Yep.
All right. So those guys won I'll switch my camera. Those guys won the election for Biden. I would say, but and I'm not hating on them. Hey, great. They did some good business. Don't get me wrong. They destroyed it. They killed it. But now with AI, are you kidding me? With AI and with the stuff we see now, bro, people are going to be more confused than ever, which brings you to
Yes.
crypto, which is a technology called zero knowledge proof, which means you can prove something is true without actually having the data. And what it does is you can prove that where something comes from. If it's tokenized, if it's on the blockchain, you can prove that information is real. It's not fake. It's not AI generated.
Mhm.
It's real, and it comes from this person, and you can see where it's coming from. So okay, I don't even have to listen to that, right? Versus now, you don't know. What are you gonna do? 2 hours of research to figure out if this is real or not? No, you're not gonna do that. Most people are emotional. They're not logical. They just think with what they see. So now the crypto is also going to tokenize voting, where your voting tool or your ability to vote will not be tied to the public. Nobody can see it publicly, but it is
Right.
verified. Forget voter ID. I know voter ID is a big thing. Forget voter ID. How about verification through the blockchain, which is, forget your ID. You just sign up through your phone or through any technology. Nobody can see who you are. The people that are verifying it can't see who you are. The blockchain, the middleman, the oracle is classifying, oh, this is a person. They're real. They have a social. They have an address. They have a name. They're going to get all the credentials, and then they're going to pass it forward and verify that what your vote is. Nobody can see your vote, but it will be a verified vote. Versus now, I mean, come on, we know there's fraud everywhere, and this isn't just elections. There's fraud everywhere. So that is the future that we're looking at. Hey, let's close it out real quick. Let's do another topic. What is something you wanted to get to before we finish out here? And just to answer your question, bro, when the Fed increases rates, the dollar gets more valuable because you get, like Tanner said, the cash becomes more valuable to hold. Now, for us, nobody really cares. If you're a billionaire, yes, you're getting hundreds of thousands on that cash. Most people don't care. They're 1%. I make nothing. I'm saving $1,000. They don't care. So there's going to be influx into the stock market as soon as there's a pivot, and that pivot's going to come with the Fed cutting rates. That won't be till next year. The other issue is this is going to be a stock picker's market, because here's one thing, Tanner, check this out. We didn't talk about this. Big cash companies, Apple, Amazon, they have tens of billions of dollars, right? They're already locked in at, this is why I'm bullish. They're already locked in at what? 2.5% rates, right? They're locked in low till 2027, 2029. Well, guess what they can do? They can park their money at the money market funds, get 5.5%, pay that 2.5%. They can fund their own debt and have extra cash flow. That's why I'm bullish. You see what I'm saying? Stocks are different than any other assets, because if you have not just stocks, but equities, because your company can adjust to the environment and capitalize on it. When everybody's suffering, you'll capitalize and actually bring more value to the company.
Well, I think that it's just a good business, right? So a good business is going to create value for everybody, including the business owner.
Right.
There's this thing, and I'm not sure if I've shared this with you, but I'll share it with your listeners. McDonald's it's either the number one or number two biggest landowner in the United States, right? Is
Right.
McDonald's, right? It's either government one, McDonald's two, or McDonald's one, government two. I forget which one it is, but it doesn't matter. They have so much real estate asset that they can sell their burger at a loss. So it's going to be impossible to compete with the company that can sell their burger for a loss. Just think you're a startup company trying to be, oh, you know, I'm going to crush the market, you know, and somebody can sell their shit for a loss. It's so hard to compete with that. But the good thing about it is, like you're saying, these good companies, there's two different types of companies, and there's two different types of people that are over leveraged right now and people that are under leveraged right now. If you're over leveraged right now, you're going to start seeing people selling their cars and their trailers and their, you know, I got, you know, these speakers, and you're going to start seeing that. You're going to see who's over leveraged. And then whenever the people that are over leveraged, and this is more macro, not stock, this is more day-to-day life, you're going to see the people that aren't over leveraged be able to scoop this stuff up for cheap. Same thing in business. There's businesses that are over leveraged that thought that they can leverage themselves to success. If you get over your skis, you're going to fall, you know? And so some of these companies are over their skis, and now a rate hike comes. If you're in that position, if there's any company that's over their skis like that and a rate hike's coming because they have to refinance their commercial properties, anytime that that's happening, then you know that that company is going to go down. Same way, though, if the company has a good CEO and if the company's killing it and, you know, they have good margins, they aren't over leveraged, they're going at the pace that they're supposed to, they're killing it in business. If those companies will feed everybody, they'll help the stock market, the stock people that invest with them, their employees will get more money, the CEO will make more money, and they're just properly leveraged. And the reason why you have to be properly leveraged is because if something happens, and I know, you know, we got two different styles on this, you know, it's a bear versus a bull market in it, but we can all understand the economy is tightening. So when real pain is in the market for real people, even if those people aren't buying stocks, some businesses feel it, right? And so we just got to make sure that if I had to tell your listeners anything, man, it's like, you know, just like you've been saying, it's literally the reason why you made your channel. It's literally the reason why I made my channel. We have friends that don't invest, that they get their paycheck, they live paycheck to paycheck. Like 95% of Americans out there living paycheck to paycheck. And all that you have to do, instead of living paycheck to paycheck, you buy your asset and you allow the monetary policy and the fiscal policy to carry that asset up. You buy a house you leverage $6,000 to buy a $200,000 house. Then you have $200,000 worth of asset. If it goes up 10%, you get $20,000. You take a tiny little bit of money and you buy this huge asset from it. And then when that huge asset goes up 10%, it doubles your money. And you can rinse and repeat that same process. Obviously, right now it's hard to do and stuff, but even with high in interest rates, what's going to end up happening with this real estate is right now everybody's on freeze. And then, you know, it might be for another year and a half. Nobody can move. So I can't trade this $500,000 house for, you know, $3,000 and go to another $500,000 house for $3,000. It goes from $3,000 to $6,000. So nobody's willing to make that gamble right now. Eventually the interest rate will drop. There'll be a turn on point. It's just kind of like Bitcoin. It's hovering around that 30,000. If it can get up or below it, that's that turn on point. That's that sticky spot. So if we can, you know, get above, or if we can get below a certain point, and what I think that point will be is it'll be 5.9 or 4.9. And I think that will turn the market on either way. And if you have a house, whenever it's 5.9 or 4.9 and the market turns on and you're really ready to sell it, you'll have 20 offers at your door. And so it's kind of the same thing that me and Jeremy always talk about, the psychology of it. Whenever people are scared, that's when you got to be brave. Whenever people are fearless, that's when you should be scared. And it's no difference on any of these assets. The only reason why they go down is because people are scared. No, the only reason it goes up is because
we need to do we need to do an episode. I know these guys want to hear it literally because it's early, right? This is the cool thing is that if you get if these, or what I'm getting at here is you need to do an episode because I want to think about this too. What you just said, you take 20 grand, 10 grand, you leverage it in, you get a bigger asset, you sell, like that whole process. I want you to do an episode with you where you explain that whole process in detail for people to understand. We'll make the thumbnail and all that. And the good thing is that it probably won't come for another 12 months. So people have time to really build their strategy. You know what I mean? They have time to build their strategy and they can always come back, ask you questions or whatever. And I want to hear it too. I want to hear it too, because, you know, you hear different people's strategies, but the fact that you already built businesses, the fact that you do, was it flipping house? Is it called flipping houses or what is the terminology?
We flipped a couple, but we just buy and hold them because
creating asset value through real estate, basically, right? Creating asset value through real estate. Yeah. So we got to do that eventually. I know guys want to hear that. My brother XYZ. Now I wanted to show you this really quick, which kind of contradicts what's happening. This is the ISM manufacturing index. It is now climbing. This is the biggest move up, right? What is this? This is the manufacturing sector is starting to roll back up, which is why I am less bearish than you on the economy, because the manufacturing sector is actually, well, if it gets above 50, then it'll be expanding. Economic activity shows an expansion. I don't think there's any weakness until Q1. Why? Because we're headed into Halloween. Remember Halloween parties? People love to spend. We're headed into Thanksgiving. People are going to travel. They're going to spend. You're going to December. They're going to spend. This is spending season. So I think growth keeps moving up until maybe January, where people drop off. They get more disciplined, and then maybe that's when we get the recession. I think. But for now, you know, the manufacturing index is bottoming out. And if you go back, like, you know, every year, this is what it does. It cycle bottom and then turns up, cycle bottom and then turns up. It's sharp. It's starting to turn up very sharply. And I look at the new orders, right? The new orders also tell you those are almost expanding. This is every big trader at JP Morgan, right? At institution said, if there's one thing I had to look at it in business cycle, it would be new orders, ISM new orders, because those are forward-looking indicators, because it's what people are actually ordering going forward. So this tells you this is forward-looking GDP. If you look at GDP, GDP is a backwards-looking mechanism. You look 3 quarters back or 3 months backwards to see what GDP is. This is forward-looking GDP. This tells you where GDP is headed. So I think we're headed higher. Plus Inflation Reduction Act, CHIPS Act, infrastructure bill, all those things are going to fuel employment. So I just don't think the unemployment rate spikes. I don't think we have any type of recession. If anything, rates will keep climbing. And I don't think that's going to cause a recession. I think what it does is it causes something to break. And like you said, commercial real estate breaks.
Yep.
or maybe it's probably commercial real estate or banks. I'm
Banks,
thinking.
banking,
Yes.
banking will break for
And then
sure.
and then what happens if something breaks? If something breaks, the Fed's balance sheet goes up to cover the deposits that
Yep.
were lost. That happened last time. Therefore, the market keeps moving higher. I call it the Santa Claus rally. I think that's what we continue to see here. And I know
So
we didn't get
do we ever pay off our debt? Like, like,
who, the
does this
US?
number ever go backwards, or does it just go always like forever
No, it just goes
history
forever
of the
up.
world?
It just goes up.
Ever,
The
forever,
debt,
right?
yeah, the debt just keeps going higher. It could stall, but it just keeps going higher. Not forever, because we could have a systemic change, but the debt will just keep going higher because it's not about the absolute debt. It's about the interest payments. The interest payments are all that you have to service the debt to keep growth going.
Right,
You have to be able to service the interest payments. So eventually these interest rates will come back down. They have to, for the
right,
treasury. But here's what the trick the treasury will do. The US Treasury, they're issuing bonds. What they're going to say they can do is start buying back bonds. If they start buying back bonds, it's called yield curve control. Japan does this. They're essentially, the reason yields go higher. Look at the 30 year. Let's go to it. The reason the freaking 30 year is even up right now is because there's selling pressure on the 30-year bond. So if you flip this upside down, what you really get is this is what's happening. The bond market and the 30-year is selling off. It's going lower. So that pushes rates up. They're literally the inversion of each other. So what the Fed or what the US Treasury said is they're going to start buying back their own bonds that they're issuing. If they do that, these rates get capped. Yield curve control, you cap rates. The Fed comes in, caps rates. Therefore, you can pay your debts and the market keeps going higher. Debt gets bigger. It always gets bigger. Credit card gets bigger. The question is, can you pay your debts? The number one economic indicator for a real collapse in growth and consumer spending is employment. If people can't work, if they don't have jobs, they can't pay off the debt. As long as they have a job, the debt will get paid. So I'm bullish no matter what, as long as those debt. Now, eventually we're gonna have an upcycle. I think that doesn't come till 2025 though. I don't think we see anything till 2025. We get a slowdown Q1, but it's an election cycle. What
you're
happens?
talking upcycle on what are you talking upcycle
Oh,
on?
I'm saying
Interest rates or on?
no. I'm saying we don't get employment really spike and go really negative, well, negative for the economy until
Right.
2025. I think it goes up a little bit next year, but fiscal policy, they're injecting a bunch of jobs in manufacturing. So I think the jobs will stick and people will keep spending. Therefore, consumer spending sticks around. It has like a little slump, but I don't think you really hit anything negative until 2025, maybe going into 2025. It could be either Q1 or Q2 of 2024. Actually, we could think all of 2024. We can think all of 2024. The thing is, what if Biden comes out and gives out more checks when things slow down? I would not doubt that, bro, at all.
But
That's
then
why.
the inflation goes up, and then the feds are gonna
Well,
hike
hold
that
on,
rate
hold on. Inflation's dropping like a rock. Month over month, it was at 1%. Literally this
right
last
now.
print. But listen. By the time we head to next year, we're in what, October? By the time you get November, December, January, February, March, April, by the time we get there, inflation will already be back to target. So they can afford to send out stimulus checks.
Okay.
Inflation does go higher, yes, but it's okay because it's already low.
Let me explain inflation to your people, because this is the biggest thing nobody understands. When you're saying that 3%, right? Whenever you or 2%, whatever they want to target, it doesn't matter, because it's even 3% would be fine if we didn't have what happened, right?
Right.
Okay. In my recollection, I think that these inflation numbers are wrong, because you wouldn't feel 10% in a year. You wouldn't feel something going from $1 to $1.10, from something going from $4 to $4.40. You don't feel that in a year. You don't even feel it in 2 years. You don't feel something going from $4 to $4.80. You don't feel that. That's just average day stuff. People are feeling their grocery bills right now, right?
Oh yeah. Oh
So
yeah.
that's what I would say is inflation was about 15% the last 3 years, but we're gonna go conservative and say it was 10%. I know that they're gonna act like it's 8. It ain't 8. I promise you, it's at least double what they're telling you in real life. But they can do whatever they want. The real rate in all of them, and I understand, like you got to believe some numbers, and I understand that. You could believe their numbers, but you got to believe them all the same. And I just don't believe them all the same, if that makes sense.
Yeah.
So What I think is, even whenever it's 2%, it's probably 4%. When it's 3%, it's probably 6%. When it's 8%, it's probably 16%, right? So that's my thought process on it. And I could be wrong. But I'm just gonna, just for easy math, inflation for the last, since 2020, was 10%, right? So we go 10%, and then we go 10%, and then we go 10%. Well, that's 30%. And then, we got this Fed target of 2%, and say it's at 3% right now. That's on top of the inflation. You see? So something goes from $100 to 110, and then it goes to 121, then it goes to 134, right? Then it goes 3% inflation. People can't afford it no more. They could barely afford it at the 100, then it jumps and it's 110, then it jumps and it's 130. Now you're saying, hey, it's just 3%, but that's 136 now or something. You see what I mean?
But
So,
wages are also climbing though. That's what you're missing. Wages are going up also. Wages are actually wages are higher than inflation right now.
okay, so you put a chat out right here. Could you buy more stuff in 2019 or 2023? You have $100. Could you buy
No, no,
more?
no. Hold on. You're confusing though. You're confusing with the amount of prices that went up with the amount of wages, wage growth. Inflation isn't absolute price. Inflation is not the absolute price. Inflation is the rate at which prices are going higher. So what I'm
Right.
telling you is right now, when we take a snapshot of how much higher prices are going, they're going up at 3.5, 3.9%. Wages are
On
going up
top
at
of 30%. So
yeah,
so
yeah,
the
yeah, yeah.
wages going up 20%. I'm talking in 3-year period, we jumped something that should take almost 30 years to do in a government. In a government that has 2 to 3% inflation, to get to 33% inflation, it
Oh,
takes.
you're talking real wages then. Yeah, yeah. If you look at real wages, which you
Yes,
calculate all inflation, then
exactly. I'm
real
talking about
wages
your
are
life. I'm talking about, is your life better or is your life worse? Can you buy more stocks or less stocks? I'm talking real,
well,
adjusted.
yeah, but you're talking economy too. You're talking about people. Yes,
Right.
we know people are broker, but that all comes back to back down to investing in assets. And what I'm telling you is
Yeah.
when it comes to asset prices, they don't care about real wages. It cares about the rate of inflation now. Therefore, inflation is at a point where the stock market can go, like that's what I'm talking about. The stock market will go higher, right?
Right.
So people have to invest because your real wages aren't shit, really, right?
Exactly.
But if you're just coming into the labor force right now, right? Because we got to think about demographics. If you're just getting a job at in California, they raise the average wage to $20 an hour, and inflation's at
They won't
3%.
pay.
Well, damn, you feel rich now. You're making $20 an hour, or you're not rich, but you're making $20 an hour. So wages are keeping up with inflation right
No.
now. They're
Right
keeping up with
now, like for
inflation
the
right
last
now.
month, last 6 months. I'm talking about for since 2019. Has wages kept up with inflation?
Only
Absolutely
no, no,
not.
no, no. They haven't. They haven't kept up with inflation because inflation spiked to 9%, and you don't get it's not deflation. You're not going to get deflation. Wages don't spike like that. Wages definitely don't spike. So you're
Exactly,
right.
and
Yeah.
I bet you that there's over, we could Google the thing. I bet you it's over 80% of people will live on a fixed income. That means that their wages ain't going up. That means that, we could have my wage went up. Yeah, I make more money every single year that I'm in business, right?
Mhm.
Most people don't have that luxury. Most people are set just like my employees. Only way that they're going to get a raise is if they get bumped up. Yearly, we give them a raise just for inflation stuff. But we also they're I can feel it in my employees. They're doing worse right now, even though I've gave them way more money than I've ever gave them in my life. They're doing worse than they were just 3 years ago. And the reason why it is because of this monetary policy, this $1,200 that you could print out and all this stuff. And then that's what I'm trying to that's what I'm trying to like
Right.
negotiate with you, is if we do have a spike in printed money, then doesn't that come with a spike in interest rate? Like Jerome Powell is so
You're
mad
saying
at these people for keep printing
oh,
money.
okay.
He
Yeah.
wishes that they would just stop printing money so he didn't have to be the bad guy. Jerome
Yeah,
Powell's the
yeah.
only grown up in our government right now.
Yeah, yeah. No, no, no. I see what you're saying because I'm making the argument if the economy comes to a halt, Biden will keep printing, right? That's what
Right.
I'm saying. But what I'm telling you is it doesn't matter. It doesn't matter. You're right that it'll hurt people's real wages down the road only if they spend it right away. But at the end of the day, that's why you invest. And what I'm saying is this is an investment channel, so that's why you
Yep.
invest, because when he does print money, yes, inflation will go up, but so will the stock market, even more than inflation. Markets move way more than in the rate of inflation have. I mean,
Yeah.
t- Tesla, Bitcoin went up 10x. So inflation's up at 9%, Bitcoin's up 1,000%, right? It moved up 1,000%. So that's why you invest, because that's the only thing that can beat the rate of inflation. It's not going to be your wages though, which is why you have to be disciplined. But at the end of the day, you invest to beat the rate of inflation, which is why I say,
In the next 3 years, where is the bottom of this market?
where's the bottom of the stock market?
Yeah, is it right now, or is it like, hey, in the next 3 years, it don't matter what's happening, it's just gonna, we're kind of at the bottom and it's just gonna whoop? Or are you
No,
saying, hey,
it's gonna
I bet you
accelerate.
next
It's
June?
gonna the bottom is in. The bottom is in. You're not gonna go back to the lows unless there's a black swan event. Without a black swan event, you're not going lower without a black swan event. As in,
I'm talking about from right now though. So what, we got S&P at what, 4,200 or something right now?
S&P is at 40. Let's see. S&P. I was looking at the inflation rate just so we could see it, but S&P is at let's see, where are we at? SPX.
Got a little jump.
And to that question, would you say we had strong PMI? Yeah, we just went over that. The PMI manufacturing ISM is literally telling us that the business cycle is actually turning up, that the economy is actually recovering. Despite what you hear, the economy is actually recovering. Consumer spending is set to slow, and jobs set to slow, but this is the underlying factor for that growth to come back. This is forward-looking data. So yes, things will slow down, but this is telling us that we're not going into a deep crash. If it kept declining, we'd be in trouble. So S&P is at 40, 4,200, 4,250. It's at
4,250
4,250.
is 4,250, and I understand $100 is what it is. Are we at the low point, or are you thinking? Do you think next April will be lower, next June, next January, next December, 2 years from now? Are like, so from right there, do you think that chart is gonna just keep going up? And obviously, eventually, it breaks in 5 years. I'm talking in 3 years. Do you think that we're at the low point in 3 years, or do you think that there's another shoe to drop?
Well, there could be another shoe to drop, but by the time it hits, it's not going to go lower than where it was. And the reason, with the way I say that is, if you look at the S&P last time it climbed up here, it was climbing, 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 right? This is where the last bottom was. Okay, this
Mhm.
was 20. This is the COVID. We got past it. We dropped. We didn't even come back to that. So we could come all. This is the highs, by the way. So even if we do break out, what we're going to do is probably we'll come back to the highs. That's typically what markets do. So by 2025, what I'm saying here is we go 2025, we break out. Hold on. We break out, and then we go up, and then we correct right back to the highs. So we're not going to go all the way down here unless it's like this, where you get a COVID pandemic, an atomic bomb. That's what I'm saying.
Makes sense. And okay, so this is perfect because that's exactly what I wanted from you. Um, so in what I think is going to happen, right, is I think that from here we will spike in Q4, right, and say we go all the way up to your line, and then drop back down and have, from today, I think that there's a new low coming from today, right? I'm not talking about from
Oh,
20.
yeah, yeah, yeah. You're saying below this area.
Yes,
Okay.
are we gonna go below that area in next year, next 2 years, next 3 years, or is it like, if you have cash, invest now because we're gonna blow out of this?
So you're
I
saying
feel
like
like
this.
something like that, and then that's when you buy. You see that, and like I said, I'm looking at it more from a macro. I'm looking at it more from business. I'm not into the stocks and looking at the candles like you and stuff,
You're not a
but
trader, so that makes sense for you. You're
yeah.
not a trader, yeah.
I'm more long term, and I could sit on this money and just make 5% if I want to right now. But I can also, if I would, 5% is dumb money, right? That's like safe money.
Right.
You want to get big returns on your money. It's that little stuff I was telling you.
Bro,
Take a
let's
little bit.
keep it real. You're waiting for the Fed to cut rates. Let's just You're waiting for the
I'm
Fed to turn around and cut rates. That's your trigger right there. The Fed is cutting rates. And I'm not saying you're gonna buy when they cut rates. You're waiting for them to cut rates in the whole like something big negative happen. And then you're like, okay, they
yes,
cut the rates. Now I'm gonna let the debris wash out and now I'm gonna buy because everybody just got crushed. That's what you're waiting for. And
yes.
you're saying it's gonna move back to if it does move to the highs, at some point where we're not going to make it, something's going to break, commercial real estate, mortgages, blah blah blah. The Fed, something breaks, the Fed cuts rates, and we go lower. That is true, and I went over this plenty of times,
And the
except for
scary
this.
part is just think if the feds can't cut because people are so pissed that they're at 8% still and they have to go to 9 or 10%. I mean, we can get in an upside down scenario with the government where we are upside down, and it's terrible for everybody, you know?
Yeah, yeah, no, I see what you're saying. I think we literally, I'm saying we go to all time highs, but we're going to
Okay.
correct. We're going to correct at some point because we have to.
Back
But at
down
the
to this rate or back down to last lows, or what do you think the
I
correction
think
comes to?
if I were to be like to be honest, 4,200 would probably be the lowest. So I would say we come to this area. We go back to the highs and it's the same as what you're
I'm
saying.
right about the same spot.
Yeah, it's about the same spot. If we do correct because something nasty happens, I think it would be around this area. This is where all the support's at. So we're like I tell you, we're on the same page. The difference
Right.
is I'm trading. So for
Yep.
me, the S&P is a small factor when I look
You
over
got
at
smaller time frames too. Does that make
look,
sense?
well, no, but this is the thing. I'm not gonna wait for here's the thing. The reason why is because when Tesla breaks out, right? And then the S&P corrects. Tesla's not going back down here. It's a we already talked about this. Tesla's getting it's going to outrun the S&P. So I'd rather
Right.
make this and then get out here at the top. And what it's going to do is if anything, Tesla will correct back to the highs. So it'll just break out and then it'll come back here. That's why I'm
Right.
more bullish because I don't want to miss out on this move. It's not
Yep.
coming back here. Look at this.
I mean, that's
Tesla
30% probably, you
Tesla
know?
never it doesn't come back to where it was. Look at there's a top, never came back. There's a top, never came back. There's a top, never come back. So it came back to here. This was the correction, but that's just not the case right now. This happened because of inflation, because a whole lot of other things. So Tesla's breaking out of a trend. It's going to move up. If it goes full self driving, forget it. The margins are going to be better, and it's done this before where Tesla broke out against the overall market. I remember it way back here. It was moving higher, and the stock market was declining. The whole stock
Right.
market was declining during the Trump tariffs. It was declining, and Tesla was just moving higher. And I was like, "What the hell is going
Right.
on? How is this possible?" I think it was right here. Yeah, it was right here, and that's because of their innovative technology. So yeah, no, I could agree with you on the S&P. I think we go to all time highs, and then we correct. We'll correct back to. Um, we'll correct back, and then that's when you'll be a little more ready to invest. So S&P, sure, but is that what you're looking for though? You know what I'm saying? Are you looking
No,
to buy S&P? That's my point.
that's my safe bet, right? So
Yeah.
we have this like company match thing, through the business that you invest into a mutual fund, basically is what it's for. And so I invest all of that into S&P. I've got a couple other spots that I do, but currently right now I'm investing all of it into the S&P. So it's not necessarily the S&P. That's why I talked to Jeremy, is because I'm trying to figure out these big plays. I'm trying to make 5% doesn't get me up in the bed. I'm trying to get 20% on some stuff, and I know
Yeah.
that through the stock market you can do it. You just have to know when to buy, when to sell, and then kind of have like the right, I would say, the right micro and macro viewpoint of what the world is currently doing. Does that make sense?
Yeah, for sure. For sure.
Because
Yeah.
because and just like that, you don't want to miss that cycle right there,
Right,
right?
because it never came back down to where like that's a big move. So
Yep,
you want to capture the move, sell when it gets oversold. There's a lot of indications. The ISM, look at when it gets oversold. Look at this. Remember I said oversold?
yep,
Extremely oversold. Now, the way you do Bitcoin is if price keeps going up, it's called the bearish divergence. And what that means is the selling pressure is lower than it was, but the price is up here. So what does that
Right.
mean? Get out, because guess what? People aren't actually buying back as strong as they were. So get out here, right? That's the signal, plus the ISM manufacturing index. What we just looked at, that thing peaked. Bitcoin peaks exactly with it. So Tanner, I
Right.
have a strategy. They literally that peaks. We want to peak at the top. We want to buy low and sell at the very top. What is the very top? Well, that's why I do the macro, the technicals, the fundamentals all at once. And then you let it come back down for another cycle, and then you buy it lower. So these assets don't come back. Once they take off, that's it. They're not coming back down.
Right.
S&P will. S&P will. They're not coming back down. There's too much pressure. And you open up the ETF. Are you kidding me? Trillions of dollars into, not into Bitcoin right away, but the ETF is trillions. This thing is going to go higher than it ever was. Plus 401ks and pensions, they don't sell, bro. They don't trade. They hold it forever, right?
Mhm.
So Bitcoin's price in this next cycle, when they get the ETF pass, it's not coming back down 80%.
One more question for you. What is your thought on the halving cycle? I've heard tons on this halving cycle, man, about get in for the halving cycle and all this stuff on Bitcoin, and the charts look pretty convincing. What's your thoughts on
Well, the
halving
halving,
cycle?
yeah, the halving cycle is
First,
uh
explain it to your listeners.
oh, they probably know. We talk about it all the time.
Okay.
The halving cycle is every 4 years, Bitcoin, basically the supply gets cut in half because it's programmable. It's basically like the Fed, except for it's programmed in. And what they do is the way the Fed tightens the dollars, right? They pull dollars out of the market, dollar goes higher. Well, Bitcoin cuts it in half. It cuts in half all the supply of Bitcoins, and basically you make Bitcoin more scarce on top of the fact that it cannot be printed anyways. There's only 21 million. So you scarcify it, you make it more scarce. And basically, if there's more demand for the there's more demand for Bitcoins, it's going to go higher because there's not enough to go around and people want to buy it. But what I learned over this last year and a half is that the halving cycle isn't as important as this. The halving cycle isn't actually what's driving Bitcoin. It is what's actually driving Bitcoin is the Fed's balance sheet. That's actually what's driving Bitcoin. So, oh shoot, got that. Put this up here. Let me see. Do I have
Is
it?
is that because of customer attention to it, or why do you think that that's happening?
Because when you increase the money supply or you cut rates, there we go. If you increase the money supply and you cut rates, then you're essentially, here it is. You increase the money supply or you cut rates, well, more money's going into Bitcoin because it's the riskiest of all assets. When there's excess money in the system, when
Right.
there's excess money in the system, that money will chase the riskiest assets.
And
It'll
going to your point, isn't that why Bitcoin spiked after everybody got $1,200?
Yeah, that's another reason why you had the halvening. So you got the supply disappear at the same time you got more money into the system. So Bitcoin is mostly driven by cycles. And if we throw the ISM on here, that's also even more. What is the ISM?
So what the hell you got up here? You got 15 things. What's this? What explain what all these charts are?
Okay, hold on. Let me do this because this will be a little easier. I'll answer Dimaj's question really quick. What did we make of Tesla deliveries? It was priced in, sold off early. They missed deliveries, but check this out, Dimaj. They delivered more. They're gonna hit 1 million this year. They delivered more in these 3 quarters than they did all of last year. So they're on pace to destroy delivery record for the next year. So yeah, deliveries were lower, but price I think it was priced in. We still have some room to move around here, but I think it was priced in.
What happened with Tesla deliveries? Did they come in? Did they
They
come in
missed.
lower?
They came in lower. They came in lower than expected. Okay, here's a halving. Now I can show you this. So Tesla deliveries did come in lower than expected, but it was already priced in. Everybody talked about it. And the reason why they were lower was because they already announced in the last earnings call that they were going to be working on their factory to produce Cybertrucks. So in order to produce Cybertrucks, they had to shut down parts of the factory, which would mean they would have less production. So they already said it was going to happen. And once the estimates came out in the past 2 weeks, price already sold off. It already been selling off. So that's why I didn't really break down like crazy. It was already priced in. So we're gonna see right now the reason Tesla's selling off, it bounced, is because those effing 30-year rates are climbing again. So that's a risk asset. Rates climb, the market's it's a headwind for the market. All right, so this is the happening right here, right? And the guys on here probably have already seen this, but basically you take the supply off, right? That's going to put price pressures higher. You're removing the supply, all the way till 2034. So that's the supply of Bitcoin. Now, what we're actually witnessing here, I have this on, let me see, where is it at? Here it is. What I think is really happening is either way you remove the supply, you still need demand. Well, it looks like demand comes into Bitcoin when the ISM, the manufacturing cycle, bottoms. Why? Because once you know the economy is starting to recover, you're going to start allocating capital back into risk assets because they're going to be supported by economic growth, right? So the ISM is in green, right? Expansion up, contraction down. Well, look at Bitcoin when you can't see Bitcoin because it blows up too much. But the ISM bottom in 2013, it started to climb. Bitcoin explodes, right? The
Yep.
ISM tops out, Bitcoin tops out. The ISM comes down, Bitcoin comes down. The ISM bottoms out, Bitcoin starts to go up again, right? The ISM peaks right here, Bitcoin peaks, cycle peak. So this is the economic cycle, not GDP, forward-looking economic cycle, new orders, employment, deliveries, all that stuff. This is the economic cycle. So you have
Right.
this, but this is actually being not manipulated, but this is actually being driven by this next cycle, which I'm about to put up on here. And this is the cycle that I think really drives Bitcoin, which is global liquidity. So when global
Mm,
liquidity picks up, look at
yep.
this. Global liquidity picks up. China, Japan. Remember, Bitcoin isn't privy to the US. China,
Yeah.
Japan, Germany. When global economies start to print money in lower rates, Bitcoin explodes, right? It kind of slushes around here. Boom, they start another cycle, Bitcoin explodes. Kind of slushes around here, dips. As soon as it starts to increase, Bitcoin explodes, right? Comes down, Bitcoin comes down. This was pandemic. After the pandemic, boom, Bitcoin explodes. So where are we at? We're near the end of the tightening cycle of global liquidity. That's why I'm like, hey, do you want to get in when it starts exploding? Okay, great. But you might miss out. Maybe you don't. Or do you want to buy this weakness because you know the halving's coming, you know the ETF's coming, and there's going to be global flows coming into Bitcoin. So global liquidity drives Bitcoin. The business cycle drives Bitcoin, and then you have the halving on top of that. And this cycle we have tokenization also. So that's basically some of the stuff that drives
We
Bitcoin.
think with Bitcoin, 25K probably the low. And like you said, some of these assets, they don't come back down. It seems like that's a number that a lot of people are sticking with it. 25 to 30 seem like it's been there for a little while. You think that that's the buy-in price? I bought in at 25. I want to know what you think.
25 is the solid number. You're good.
Mhm.
If it drops, it's going to capitulate right back up.
22. Yeah.
You wait too long, it's going to be at 35K. So
Yep.
25K is the level. What I want to show you is that Fed printing versus every other company, S&P. This is why I don't even own S&P. I think it's stupid in my view. I think it's stupid because if you said it yourself, inflation is actually, would you say inflation is actually 13 or 10%? You're right.
Yep.
You are right. Shadow inflation, right? If we're talking
Mhm.
about shadow inflation, it's at 13, 10%. Well, guess what? Why are you buying S&P then? Because it's not outperforming the Fed's balance sheet. Why are you
Right.
buying Berkshire? Even Warren Buffett cannot outperform the Fed's balance sheet. And that's that's like the value stock of the century, or
Yeah.
everybody goes to Warren Buffett stock. Okay, there's only one thing beating the S&P here. Okay, we're going to get to it. There's one thing beating. Oh no, there's not one. There's a couple. Oh wait, what the hell is this? No, this is not it. All right, so
No, S&P, for everybody out there, S&P is a dumb strategy. It is for if you don't know what you're doing and you need to put money somewhere, put it in a safe bet. You don't want to put it in like I bought a bunch of them damn crypto tokens, whenever they were like, I don't know, Dogecoin and stupid stuff like that.
oh yeah,
It's like you don't want to be like, if you're trying to be safe, then that's safe. Right now, though, the safest thing for your listeners, money markets. Money markets?
Just so you know, these guys that are on here, trust me, they already know. This is not
Okay.
yeah, we talk about this all the time. They want to hear about you building your business. We'll get to that and building real
Yeah.
estate. Because trust me, we talk about M2 money market fund. We talk about that every single day. And I see the guys on here, they already know. So look at NASDAQ, bro. Now this is beating the Fed's balance sheet. Who is this? The Magnificent Seven that we talked about, right?
Right.
That's who's beating the S&P. And you can see it's barely beating the S&P to some degree. And then this is the next chart that I wanted to point out, which is crypto versus Nasdaq. Right? Let me run to the restroom real quick. Take a look at that. Not even close.
Crypto versus Nasdaq. Yes, this is not a close one. You know, and the question I'm going to ask Jeremy whenever he gets in, is we actually have the seven largest S&P 500 companies are carrying the S&P 500. And so what ends up happening is I think that they have like a growth rate of like 40%, something like that. And this is what, if you can get guaranteed 5 but an upside of 30 to 40, you're better off going on that upside 30 to 40, obviously depending on like the assets of risk. But if we are going to focus on, and Jeremy's back, but if we are going to focus on these 7 companies, like you're saying, the best 7, I think that what some good homework for Jeremy would be for your audience is go back and from Jeremy's expertise, these 7 companies, if S&P's stupid to invest in, I agree with you. If 500 companies are going low, but 7 of them are holding the whole thing up, why don't we just switch that money into those 7 companies and then get that 30-40% rate of return versus the safe 5? And
Yeah.
I think though, as an average investor, not somebody looking into these stocks and stuff, the question that I always have is, when is my buying time? When I don't like, could it come down? It could come down. Could it go up? It could go up. So what me personally even would like to see is, what does Jeremy think that these stocks low and high is? What is the buy-in point for these stocks low and high? All 7 of the ones, and maybe for your listeners, and send it to me too if you do it, that you could put it up there where it's like, hey, Tesla 150, Amazon 260, and kind of hit these price points where you think you're a buyer in at this price point. Does that make sense?
It does. I mean, we bottomed out already. Like I already know what some of these dudes on here own. They've already bottomed out. So like the safe buy, right, for Bitcoin would have been when it collapsed here, and then
Right.
when it collapsed again because the oversold. Remember the oversold we were saying?
Right.
So it got extremely oversold. So that would have
That's
been when you
16 to
bought
18.
under 20,000, right? Everybody's it's going lower, but this told you it wasn't going lower. This
Right.
told you that actually people were buying more of it, even though the price came lower. So that's a great buy because people are buying it, but the price is actually lower. That's what we use the RSI on here. And
So is
then if
this
you
showing Bitcoin's going lower then?
oh shoot, hold on. Uh
Or, oh, this is Tesla. Never mind. Oh no, that's Bitcoin. Yeah.
yeah. Oh, you're talking about the RSI?
Yeah.
Um well, let me see. The way you look at this is there's less buying pressure. Yeah, the buying pressure is coming down, but it's not bearish because so is the price. The price isn't
Right.
going higher. If the
Right.
price was up here and this was falling, then something's wrong.
Right.
But it's in unison. It should be in unison.
So that's probably just a stagnant ish.
Yeah, that's just stagnant. That's just stagnant. I mean, it matches. If they match each other, then you're not really seeing anything out of the ordinary. It's when price is going up and this is going down, or this is going up and price is coming down. So you want to see a
Right.
divergence, right? There's something missing. It's not what do you say? Not
Not correct.
congruent. It's not correct.
Right.
Something's incongruent, and you want to take advantage of that opportunity. So that's what that would be for Bitcoin. I think Amazon right now is actually a great point. They're going to come out with their AI. This is a major support for Amazon. I know. Oh, that's Big Man's coming who watches that usually. So Amazon's at a pretty good point. Now these aren't oversold, but I think for the cycle they might be like the Magnificent Seven are going to be good. Meta, just bounced,
Ooh,
but it's forming a very yeah, this thing got destroyed. It was crazy.
yeah,
And you could like here's the bad thing about RSI. This was extremely oversold, but it kept going even further.
right,
So that's why that didn't give you a great signal. So you must know
right.
the fundamentals. You got to know the fundamentals too of the company, what's going on in the fundamentals. And at that point, Meta was threatened by something. I don't remember what it was. Was it the revenue? They did something terrible.
They
So
did the metaverse.
well, yeah, they did the metaverse.
They put like trillions of dollars into that, and then it kind of like lost money, I think. I
Oh
own Meta
shit.
stock, so it was me too, but then it came out of it, so I was glad.
Yeah, yeah, it came out of it. It was it was to their margins. Their margins collapsed or their revenue, their EPS, I think it was earnings per share. Let me see, EPS. Okay, their earnings per share peaked and they just dropped dramatically. This is earnings per share estimates from analysts. It
Right,
dropped dramatically. So they're like, "Oh shit, we ain't gonna make no money." So they got out. Look at when the earnings bottomed, the stock bottoms.
right. Yep.
These are estimates though. This is not the actual earnings. The earnings didn't happen till later.
'Cause they don't
Oh,
know.
they actually lost money when they bounced. This was a bad earnings report right here. When they bounced, it was a negative earnings report. But what people don't realize about stocks is they're forward looking. So they said, okay, that was the worst of the worst. Now the estimates are going higher. So the
Right.
stock went up. So it's the opposite of what people typically think happens a lot of times. And also they did better because they started cutting jobs. So they increased their margins immediately. Imagine if you could use AI and cut like half your jobs.
Yeah, right
So
away. And that's the thing, to go to your point on this AI stuff, depending on, service versus retail is a little different. In the service industry, it'll be over half of your cost is employee cost. In a retail, it'll be a little bit less. But still, it's most likely it's your biggest cost. And if you can automate systems in a business and free up, because some of these businesses, Amazon, Tesla, they're not paying their workers $15 an hour. They're paying their workers $250,000 a year. And if you can automate 10 of those jobs, I
oh
mean,
yeah, yep,
it gets into bigger numbers even than that. It's 100 of those jobs. If you can automate 100 of those jobs and buy this, $20 million machine, it's stuff like that. And that's why it's important to have good CEOs and people that are about their business, because it's kind of like we're saying, all these companies, all these top 6 7 companies, they all have great CEOs. They all have people that know business. They all have people that, or most of them, I'd say, have people that are gonna say, hey, I know that they want us to do this, but this is where our bread is buttered. You see people come off of like the Bud Light situation. They didn't stick to their bread is buttered. There's certain situations that people can mess up, but good CEOs, they know how to make business work.
right.
Like Elon.
Yeah, so it's yeah, like I said, global M2 is on the rise. I was trying to look it up for the four major central banks. Europe is at the end of the cycle. I think we're going to get a bit. Here's the other thing about the market: it over exaggerates to the upside and to the downside. So if everybody's bearish right now, because look at just think about you. You're fearful right now. You're like, oh hell no, this market is going lower. All these UAW strikes, student loan repayment, commercial real estate delinquency. So everybody's bearish and a lot of people are not positioned. They're waiting in cash and everything should roll over. All of a sudden, well, actually, growth doesn't fall off. The Fed paused. Inflation's going lower than you thought. People want to get in because the S&P is not actually falling apart. They also have to meet obligations for the end of the year, and they'll get fired from their clients if clients find out that they missed Nvidia, Meta, Apple, Amazon. They missed all these upside moves from
Mm-hmm.
chips. They're going to get fired. So they want to get a piece of it. So they're going to climb into the fourth quarter and there's going to be a lot of flows and that's going to cause people to break out trade and the price actually goes more overvalued than it should be, and that's what I'm trying to catch is this next overvalued move. Now when we hit January, somewhere around there is where I'm going to be like, okay, let me ease off because consumer spending is going to come down, and even though there's
So
still infrastructure,
Your horizons are like what would you say you're trying to sell these stocks, and your horizons are a month, 2 months, 3 months? What do you
It,
think
it
you're
my horizon, if I'm trading, is right now I increased it. It used to be even shorter. It used to be literally in the day,
right,
or weeks, or now I'm doing months. It could be 2 months.
right,
Could be 2 months. I did 6 month option. So my time horizon is usually 1 to 3 months right now. Those are my time. But if you go to crypto, my time horizon is years.
right. And see, I look at see, I'm more of a long-term investor, so I'm looking at these stocks as long-term. That's why I tell you, I don't care if sitting on this money for a year and a half, if because I can make safe money, 5% off of it if I could let it sit for a while. But I don't want to, you know, my whole like thought process on it is I thought it was gonna happen in June, right? I thought all this stuff, the real estate, everything was gonna come to a head, and then boom, that was gonna be the top of the market. Well, I was off on my timing. I don't know if I'm off on my timing and maybe I'm a year off, or am I off on my strategy where it's not coming down, right? And so that's kind of the thing that I'm full time like looking at pages like yours and stuff, just trying to get different
Bro,
advice.
everybody was off. Everybody was wrong about this last 2 years. Every
Yeah,
professional I knew, everybody was off. The only reason I was even calling the bull market is because I literally took the time to listen to everybody and weigh out. I had a big whiteboard. I'm
yep.
weighing everything out, and I'm like, wait a minute. These people are way off sides. This thing's gonna go higher. Even if the recession comes, it's not
It's
coming
not
for a
right now.
while.
Right.
Yeah, it's not
And
coming
see
for a while.
that's where I was. I was just more, I mean, we leveraged our business so hard last year to get cash rich in June, and we were. And then, but then you have a bunch of cash sitting, and then you're like, I have to land it. It's
There
it's
goes breakout.
it's stupid to have money sitting in a bank inflating like this. So you want to leverage it somehow into something that you can get some rate of return. And so the safe rates of return, like you're saying, CDs are money markets.
Bro, why don't
Um,
you what about oil? Are you interested in buying oil or energy?
yeah, I've got a little bit of oil actually.
I think that might the energy companies might be up for a while. I mean, I think it's overblown right now. I think it needs to pull back because you don't
Right,
want to buy something when everybody thinks it's hot. You want to wait till it
right,
comes back down and people give up on it. So oil might be a good safe bet. Energy, I don't like it because I'm just biased against oil, but I'm not, I understand that it's a good inflation hedge because it literally is the inflation.
right. Yeah, and oil. I don't know. My brother actually got me into oil. He's like, dude, look at this oil stock. Buy this, and so I bought it, and I'm actually up on it right now. I bought it at like 6 something. I think it's at like 7 something right now. But yeah, like and that's really even why I'm on here. Is educating myself more. Trying to help your listeners out with whatever I have knowledge of as well. But I really want to know, or I'm really trying to like throw my ideas out there to you to see if you can challenge any of them,
Right.
because this is more macroeconomics. This is more business. This is more how I've seen business happen in the last 9 years, and then this is more even talking to these top end people, man. I'm talking to big financial planners. One of the financial planners, he actually owns like 40 salons, and he's telling me what he's doing with this stuff. I met with him Friday, right?
Right.
And he's telling me what he's doing. I'm mentioning with I have 2 financial planners and a CPA. I meet with them, and so like I'm kicking this knowledge off of like not stock people, more just like knowledgeable people, bankers, the CEOs of banks and stuff like that. And I can see that they're worried right now too. They're like,
Mm.
hey, bonds is the best thing. Hey, you just do this until this happens. And I can see the fear in it. And like you said, I there is credence to what you're saying. Is there's a lot of money sitting, and I don't know where that money's going to go, if it lands in the stock market, or if it lands once the real estate market comes down, or if it lands in Bitcoin, or I don't know where this stuff is going to land. But I do think that there is smart people that waiting for this next foot to drop. I'm more year, 2 year, 5 year on
Bro,
stocks.
let's ask this question here. These CPAs, all
Okay.
these guys, did they all buy Apple in 2000? Google, Facebook? Hell no. They were buying
No.
bonds. They were buying
Yep.
S&P. We just saw the chart. Who can outrun the Fed's balance sheet? No one, except for
Yeah.
the Magnificent Seven and crypto. So if you have a long time horizon, crypto is literally the perfect asset because you don't need it to do anything. And that's why I'm like, bro, for the savior for these young guys is crypto, because nothing else is going to make them enough money to buy a house
Mhm.
or be able to do anything. So you want to be smart with your money, but really it's like, hey, at the end of the day, not all crypto, but at the end of the day, it's like Bitcoin, Ethereum, and I would say Chainlink are your best assets other than the Magnificent Seven, who are going nowhere over the next couple of years. Forget bonds. Are you kidding me? Bonds don't yield you enough. It's a great trade for billionaires or millionaires who have to manage money and not go through volatility. They have certain things they have to meet, and they can't buy enough Bitcoin. They can't buy Tesla stock because it outweighs them, blah blah blah, whatever. But at the end of the day, the evidence shows that nothing outperforms the Fed's balance sheet. It's not going to be bonds. It's a safety trade to park money in. But why are
Yep.
you? If you're young, you're 30 years old. I mean, if you're 70, yeah, buy some bonds, maybe. As they keep shorting, the thing is, they keep shorting the 30-year bonds go lower. So they keep buying bonds, but the bonds are crushing them, and that's not going to reverse until something breaks or until
Yep.
the economy rolls over. And I'm saying I don't even think that's going to happen until January, February, March, April. So, like, do you want to buy bonds and just keep getting smashed all the way down there? Or do you just want to buy crypto? And hey, if bonds recover, guess what? Rates come down, crypto goes way higher because rates are, the cost to fund that kind of stuff goes much higher. So right now, bonds and stocks are actually competing, and depends
Right.
where you buy in at, but that's what I would say.
No, and,
Um,
and you make a lot of good points, man, because these financial planners, this is what you guys got to understand about everything. If you ask a realtor right now, is it a good time to buy? They're gonna say it's a great time to buy.
yep,
You know,
yep.
and you can't listen to these people. I literally have two financial planners and meet with three of them because I don't trust none of them. I talk to my CPA and then I talk to my sister's CPA just to make sure the stuff makes sense.
Would you say
Because
you meet with three of them?
I meet with three CP or financial planners
And
just
you
because
try
I
to
don't believe
see
none of
you
them.
you do you try to see where the contradictions are when they start talking about stuff?
Oh yeah, dude, because I got them from my bank. I get
Yeah.
one from my bank, and then leave. Don't worry if you have over this much money. It's not a big deal. Nah, bro, this is my money. Like it is a big deal. There you got to think the banker. He's trying to keep the money in the bank. You got to think like, oh, this financial planner. They're trying to get me to go into this bond so they can control the asset. And you know what I mean? You got to know where they're all going. And so what I'll do is I'll sit down with one. I'll let him spill out all of his lies, and then I'll challenge every one of them
All
and
of it
tell them,
like
hey, I'm not the one. I'm not the one to try and lie to like that. And
yeah,
you're not going to tell me to keep over 250 in a bank because that's stupid. You're not going to tell me. And so I
yeah.
just clap back at them, and then they'll give me the real after that. But they have to realize that you're real, and then I'll take after I get as much realness from them or facts from them, then I'll go to another financial planner, and I got two that I pay for, and then I'll just run it through them and see how if that's good. And it's a bunch of like more like how to like write off money and stuff like that is a bunch of it. But when they give me investment advice, they're just trying to be, hey,
Right.
be safe, don't worry. And they might be 40, 50 years old. You know what I mean? I'm more like I'm a little bit more risky. Obviously, I put it all on a business, you know what I mean? So I'm a little bit more risky than them. Um, like I said, I'm trying to figure out like I do got the diversification in Bitcoin, and I'm trying to figure out if these stocks, if individual picking stocks, which obviously I've got the top seven. I didn't sell any of those stocks. I sold all of my weird stocks. You know what I mean?
Yeah,
Like I
yeah,
said, I,
trash.
I lost on it, but I'm trying to be smarter. I'm trying to figure the system out, and then I'm trying to leverage a good play. I know that you were telling me about your play on Tesla. I'm trying to leverage a play. You know what I mean? I'm trying to get in the game and leverage something. I don't
Bro,
want to buy it.
get some trading in there, bro. Get you some
Let's
trading in
go,
there,
man.
man.
I need you to teach me.
Hey, we'll do some monster swing trades. I'll get you on the swing
Yeah,
trade here.
absolutely,
Um,
dude. I'm
hey,
game.
bro. Hey, I don't know about you, but I think we killed it. We killed it. That was a long that was a long one.
Yeah,
Hopefully I'm not
man.
echoing there.
We killed it. We killed it.
That was a good one. Hey, yeah, I'm sure you got stuff to do. I got stuff to do, but that was went over. Hey, that was good. That was I would say audience there. We got a pretty good flow. I mean, I know you from the
Yeah.
past. We have a lot of topics to go on, but definitely I want to pick your brain about kind of your thoughts around not just real estate, but like business and how you're looking at stuff and how you would strategize. Because I don't know strategy when it comes to buying, not just buying a house, but to buy real estate to leverage assets. Certain people, like you said, they want to get you to buy a house. They're a mortgage broker or something. But
Yep.
you're like, I'm trying to grow asset value so that for you, not to pay me. What do you get out of it? Nothing. You're not selling a course.
Exactly.
I get nothing out of telling people Tesla. What the hell am I getting? I'm getting nothing out of it. This is, I'll sell a course on how to trade in the future. But anyways, yeah, I think it was good, and we'll have to get together. We'll have to cover the rest of the topics next time, or we'll get through.
Yep.
We'll see what it is. But hey, whatever it is, what it is. Appreciate you guys who showed up today. You guys stay blessed out there. Shout out to you guys that stayed in Tanner. Again, Mr. T Mac. So again, I'll have his stuff in the description for YouTube if you guys want to follow him there and his channel. And other than that, you guys stay blessed. I'll catch you guys later.